Good morning. I am not muted. Am I muted? Guys, let me know. Let me know in the comments. Can you see me? Can you hear me? Who cares about looking at me? Look at gold. Holy macaroni with a little bit of cheese on it. Look at that. This is the 4 hour. This is the one. This is the 50 minute. This is the 5. This is the 1 minute. Look at that. Yeah. Today, the money-making machine is golden. It's painted in the color of gold. And I'm happy because 30% of my long-term portfolio is in S&P 500. No, I'm kidding. The gold, of course. Making money. How much money am I making? Well, I wish I was a little bit more leverage. Gold is absolutely crushing it today. Absolutely amazing. Amazing. Yeah, hear you loud and clear. That's probably why because I'm screaming. So, do we long the breakout on gold? What happened though? Like, what happened? Because if we look at, we got USD CAD. We got USD CAD breaking out here as well. I'm long on my GBP AD. My GBP AD trade here looks not very good. GBP NCD bad, GBP AD bad, GBP CHF bad, GBP CAD bad, GBP USD bad. I would be a good weather forecaster. I would just go on, just be like, Monday bad, Tuesday bad, Wednesday cloudy, bad, Thursday bad but better, Friday fantastic. Right. Okay, so why are we seeing the British pound falling to yet another failed attempt at strength? Most likely because we saw the UK services PMI being lower than expected. UK economy is not doing good. Not sure if we're dumping because that's not much of a surprise, is it? Yes, today we're doing a giveaway. We're going to celebrate the fact that we hit 85k subscribers. If you're new here, welcome. Make sure that you hit the like and subscribe to the channel. 85k subscribers, quite amazing. I remember when I did a post about hitting 50k subscribers. And the goal here this year is to gain 100,000 subscribers on the channel, and to be able to do that we need your help. We need your help in actually hitting that subscribe. So if you're watching this, make sure that you are subscribed. I know that a lot of you are coming into the live stream through the YouTube homepage because we're being recommended on the homepage, but I know a lot of you are not subscribed. You're watching but you're not subscribed, and you know, not really a problem, but we would really very much appreciate if you double check that you're actually subscribed. So go to YouTube. If you're watching this on X or any other places, make sure that you go to YouTube and double check that you're actually subscribed to the channel. If not, make sure that you are. And a little tip as well, if you hit that bell notification button, you'll always be notified when we are about to go live. Yes, that's right. Like and subscribe. Russian, probably not pronouncing that name correctly, but you did $65 on gold. You made $65 on gold. Nice. Good stuff. Let's go. Right, so my long on GBP AD not looking good. Is this a dip to be bought? I don't know, but I'm in the position. I'm going to stay in the position. I'm not really doing much with that one. I'm going to look at Euro JPY as well because I am long on Euro JPY as well. Looks like not the best breakout trade. I bought the breakout right here. What are we going to talk about today? Well, that's completely up to you, but while you work on that, while you try to figure out what you want to cover today or what you want us or me to cover today, we're going to have LJ coming in here shortly as well. I will talk about something that I want to be doing today, and that is starting... I want to talk a little bit about system development, okay? Because we have a big problem. Right, so we have a big problem in the trading industry, right? And that problem is the fact that there's a lot of trading courses out there. You know what I mean? You see it on Instagram, on TikTok, and everywhere. Like, they show you, usually it's going to be a reel, a short, or whatever, and they show you setup and it's like, look at this, and they have a name for the strategy, right? And like, go here, sign up, buy this course for $900 or whatever, and you can trade just like me. And I know a lot of you are probably bought trading courses, and you're probably not trading the course that was, you're probably not trading the system that was in that course. And there's a simple reason for that, because, well, actually, there's two reasons for this. One, the course, first of all, might not be profitable. Maybe it's just a marketing scheme, right? Or it's profitable, but the system was created for the person that created the system, and that person is profitable trading that system in that way. Secondly, a lot of people, they come into the industry and they think that all you need is a strategy. So they buy a course, get the strategy, but they have no idea how to build a system, what's needed, the recipes necessary, and what statistics you need to find and what tools you need to use to build a system, build a strategy. Because chances are that you'll buy this course and then you'll not be profitable, and you'll put it on the shelf and say, okay, this is a bad strategy, I get scammed or whatever. But chances are that the strategy has some bits and pieces on it that is very useful to build upon. Okay, so let's say, for example, you buy a trend following, you buy a course on a trend following system that is basically says, okay, buy whenever you have a bullish engulfing hitting the 20 EMA on the 4 hour. Okay, but you can't get it to work, so you try a new system. But what you should do instead, you should look at the details of this system and say, can I perhaps try using another moving average? And if you do use another moving average, what's the probability of that being better than the one in the actual course? These are the things that you have to learn to be able to really make it as a trader, especially long term. Because even if you have a profitable, there comes a time when it's not going to be profitable anymore. And at that point, you'll have to try to fix the system or create a new system. And it's an ever repeating cycle. Think about that. Super important. So today, I wanted to perhaps explore a few ideas on system development. I know it's not sexy, it's not super fun to watch, and it's not super entertaining, but trading is not entertainment. Okay, we're not doing this, even though the live stream we're trying to be entertaining and trade live at the same time. Trading is not supposed to entertain you. It's supposed to feed your family. It's supposed to put food on the table, money in your bank account. You have to work. Work is not always fun, all right? And it certainly is not supposed to be entertaining. So there's a few ideas that I wanted to cover here with you today. We're trading the Forex market, right? We're trading the Forex market. And by the way, guys, we have a link in the description. Remy, if you can perhaps pull that up, add the link in the comment section, and then pin that comment as the pinned comment at the top. Go into that link and make sure that you follow the YouTube and follow our Instagram accounts as well. And the giveaway, that will give you an extra entry into the giveaway. That's right, Robert. When trading is boring, it's a good sign. Right, so we are trading the Forex market. Now, the Forex market doesn't really fluctuate up and down like a cryptocurrency. It's not like we're going to see EUR USD go up 30% and then the next day down 95% like some of the altcoins out there. Because of the fact that you have two forex pairs paired against each other, and it's somewhat designed to be fairly stable. You can see here, for example, Euro JPY, the yen pairs is obviously quite volatile, but that's a 6% move, which is obviously quite big in the forex market, but it happened over a period of about a month, and that's considered a very, very big move in forex terms. So because of the fact that the forex market tends to be generally stable, and when you're looking at the prices and you're looking at an average price of a specific trend or a range, usually what happens is prices will revert back to that mean as it tries to find that fair value. So I've always been a swing trading trend follower, but I've started developing systems based on that idea of mean reversion. Basically, what that is most of you already know this, but let's just assume you have prices trading like this. Now imagine if you would draw a line in the middle of price action and a line at the highest point of price action and a line at the lowest point of price action. If the market is trading like this and the overall characteristics of the market is in a sideways trending market, a range, then we could perhaps think that when prices comes down to the lows, if this overall trending market and if this overall market, the trend of the market and the structure of the market is going to continue, we could assume that once prices hits the low, it will eventually return to the middle of the range, and this is the mean price. And this is why it's called a mean reversion strategy. When prices deviate too much from the middle price or the average price or the mean price, you can expect price to eventually return back to the mean. This is what it would look like in a range. Now imagine if you flip this, because you have the exact same principle in a trending environment as well. This is the range, right? The middle line, that's the mean. Just to so Remy, what I want you to do is check out the giveaway link. There should be a giveaway link in the description of the YouTube. Let's pin that in the comment section and link it in the chat here as well. So prices will move within this range like this, and you buy at the low, sell at the high, with the idea of taking profits at the average price, with the mean price, simply put. Now, same thing goes for a range, a trend, okay? So this can be applied to a trend following strategy as well. Imagine you have the trend going like this. There's no giveaway link in the descriptions. Henry says there's no giveaway link in the description. Well, then that's why there's no giveaway link. Let me go in and check that out. There should be a link, but apparently I did update that one, but it seems it has not updated yet. Okay, so here is the giveaway link right there. Posting it as a comment, and then we can Remy, you could perhaps add the giveaway link to the description and also make a pinned comment out of that one. Okay, so this is the mean reversion idea. You know what, let's just go back to gold as well. Wow, okay, gold is going absolutely crazy right here. This is very, very impressive. Very impressive on gold. Anyway, so that's the trend, and the mean reversion works in the same way for a trend as well. Give me a second. Right, so there's a few, basically what I'm thinking here. Okay, so this is obviously a pattern that we see quite often, the fact that prices wants to return to the mean, the mean price. And there's a few tools that I'm thinking about using here in this strategy. So first, we want a way to determine the mean price, right? What's the actual mean price, the average price? And there's a few tools we can use for that. And I've been looking into the linear regression channel, or the linear regression chart, or not the chart, but the line. A lot of people would say, okay, let's just put a moving average on price. If you put a moving average on price, you'll get the average price. But a linear regression line, instead of just putting in moving average, which is basically the 20-day simple moving average, is just a line on the chart that shows the price, the average price of the last 20 days. So you take you combine the prices of the 20 days and then divide it by 20. I believe that's a calculation, and that brings up a line on the chart. And usually it's going to be lagging, and it's usually going to be either below or above price, or fluctuating around within the range. Now, the linear regression line, what it's going to do instead is it's going to take a portion of the chart. It's going to say, okay, let's take from point A to point B, and then we're going to draw a straight line from the beginning to the end of point A and point B, and that line is going to be as close as possible to all the data points within that range. So if you were to draw a straight line through price action, and you would say, where would the line be if it needs to be as close as possible to all prices within that range? And usually what you're going to get is you're going to get a line that visually looks like it's going straight through price action. So I'm thinking about applying a linear regression line, and then looking at finding deviations away from that regression line. And then if you hit a certain standard deviation away from that line to the upside, you want to short it back down to the line. So we can look at something like Bollinger Bands, right? So if we add Bollinger Bands to this chart, you will see that the middle line of the Bollinger Bands is obviously not going through the middle of price, right? And why is that? Well, because the Bollinger Bands is simply a simple moving average, and then it has a set number of standard deviations above and below the Bollinger Bands. So basically, it's based on moving averages, and that's why you're not going to see that middle line be straight through price. So a lot of times people are saying, let's short the high down to the middle in a Bollinger Band. Now, that's not going to be very effective in a trending environment, because in a trending environment, especially the upside, you're going to be probably at most be spending time at the top of that trend line. But what I'm trying to do here is I'm trying to figure out how can I add a linear regression line through price. And there's a tool called linear regression channel, and basically it's like a Bollinger Bands, but it puts a linear regression line, and then you decide a set number of standard deviations above and below. So it's going to look something like this, right? But that standard deviation from that middle line is just a specific number. It could be 1.5 or 2 or whatever. But what I'm looking into is how can you have a standard deviation based on ATR. So you try to find a way to determine the ATR based on the linear regression line. And I have not found a tool that does this in a good way. So let's see if we can experiment some with this. Now, just to be sure, I have not used the linear regression tool a lot in my trading, but I think it can be really, really effective. So let's try to look at the linear regression channel. What's up, LJ?
Morning, guys. How we doing?
Morning. Doing
Man,
good.
Google Chrome, does it ever get better? I swear, every couple months, it's worse and worse and worse.
I used to like Google Chrome actually quite a lot.
I like
Yeah.
it, but it just seems to have so many problems. It gets laggy, or just like the code just breaks or something. You open it on, I don't know, Firefox or something, everything works fine. Oh, it's terrible, man.
I'm using Brave. I think Brave is built on Chromium, which is supposed to be that's Chrome's open source, I believe.
Yeah, yeah. I did download Brave the other day. It's one of those pain point things where you've already got everything set up
Yeah.
appropriately, right? Yeah. Oh god, I had
Yeah,
to
it took me,
reinstall everything, and
but it should be easier. So you can use the you can export everything from Chrome, I believe.
yeah, I'll
I
have to
think
have a look at it because
yeah.
I sort of did that with Edge because obviously Edge came out and it was a bit better, but yeah, I don't know, it's still missing pieces, and I went straight back to Chrome. Anyway, how we
Yeah,
doing?
I'm using Brave, and
Hello,
I think it's
everyone. By the
pretty
way.
good.
Mm.
Right. I'm talking. Do you know if TradingView has a linear regression tool, or if it's only the channel? Because I'm thinking there should be a tool where I kind of mark out a specific area on the chart for the line to be based on. So, for example, if I did, started drawing the line from here to here, and then I wanted a tool that would pretty much, show me a line here or something like that,
Mm.
There should be a tool like that.
Like yeah, so like line of best fit linear regression thing. Yeah, I know what you mean. I would imagine there would be on TradingView. I mean, there's tools
Yeah,
for
I mean,
pretty much everything. So
there is linear regression channel, and I guess might as well just use the channel. So then how do I actually, why does it begin here? You know what I mean? Like,
does
why
it not let
is,
you set where it starts from? Is that what you're saying?
yeah, but I didn't set it. I just clicked it.
Yeah, that's what I meant. Like, um,
I should be able to. Yeah, I'm just clicking it and then it gets added to wherever.
so try this one. This one's not too bad. I literally just randomly found it. It's called Linear Regression Plus Plus. Yeah, and
But it
then you
still
should be able
comes
to
from.
go to the setting. I think that one's just easier to see as well, and then you should be able to change the length. So change it from 100, and then that'll be the previous number of bars.
Right. Okay. So
Yeah,
it has a look back period. Of course. Yeah. Yeah, that makes sense. That makes a lot of sense. So what you would have to do then, oh, this is actually has like sell signals and everything. So obviously got sell signals every time the top gets hit.
Mhm.
And that line in the middle, that must be a moving average. I wonder what. Let's see.
Well, yeah, that one would be, I guess, just the midpoint, right? So
But that's the
the two,
regression.
yeah.
This is a
So like,
regression line.
yeah. So if you go like, see how you look at the settings, you can see so the two top and bottom lines are two standard divs from that midpoint, right?
Yeah.
Yeah.
But then what is okay? So this blue one is supposed to be the
That's
regression
your,
line.
yeah.
But then what is this other line that looks like a moving average? Because that is the regression line. So this is the linear regression line, and that's just the regression line. No, does that make sense?
Oh, I see what you're saying. Yeah, sorry, I've got other moving averages on here, so I didn't see it. I see what you mean. Yeah.
So that there's obviously a difference
Yes.
between. So this has to be. So then my question is, how is this regression line calculated? Okay, so basically, oh, okay, I get it. So the linear regression line is calculated using the data from, but that it doesn't really make sense because they're not showing the same type of trend. Because if they did, then
Yeah.
it would
So
look something like this.
I think with that, the linear regression line is constant, and then the channels are basically just a standard deviation channel per the number of lookback bars. So yeah, that one's not showing it's showing a continual regression. So then you'd have to see how that's calculated. I don't know. This was just a random one I just pulled up to see if
Yeah, but
if
it's
it
interesting. But I
right.
just need to understand. I just need to understand what is the difference between the what's this color called? Teal or blue? Teal? Is it teal?
Yeah, teal, aqua.
Aqua.
Yeah,
Yeah. Okay. So yeah, teal. This line is obviously the line that I'm looking for. This is the linear regression line. But I then
yeah.
have to figure out
Of that section, yes, yeah.
of this section. Yeah. But then
So that one is smoothed. The other one
yeah.
that's yeah. That's why it's also got the like you can change the smoothing setting.
It needs to be all right. And
I know I can search for other ones. This was just literally the
so what I'm trying to figure out here is I'm trying to and by the way, guys, you can join the giveaway by hitting the link in the description. Should be a link in the description. Should also be there's also a link in the comment. All you have to do is go into the giveaway link and make sure that you sign up to all of our Instagram accounts. That will give you extra entry, and make sure that you are subscribed to the channel as well. No, so I began this live stream, LJ, by talking about like the importance of understanding how to test ideas and come up with new ideas and like system development. And I talked about how there's a lot of trading courses out there, and some of them are just not profitable, but some of them are actually profitable, and some of the courses out there that sells a system can actually be really, really good, but then you buy it and you're not profitable using it, so you might get a new system. And then I thought, people should understand the idea behind creating a system, because you can then take this profitable system and adjust it to your own type of trading. So for example, if it's a trend following system and it's profitable, but you see that it's only profitable at the lows, you might want to think maybe it's a mean reversing type of system. It really is it's not a trend following system. It's just a mean reversing system in a trend, basically. So because that's basically what a lot of trend following systems are. If you're looking at a uptrend and you're saying trade with the trend, well, theoretically, trading with that trend in a mean reversal point of view is actually also shorting that uptrend, because the trend of it's almost like you take a sideways range and then you flip it. It's 45 degrees angles, and then you can. So I'm thinking about working out a possible a new type of indicator if it's not created already. But basically what I would want to do is to be able to add a linear regression channel, and then instead of just having standard deviation, because standard deviation is not really based on statistics of the trading range. It's just simply putting a number, and then it's just going to be a straight line. What I'm thinking is having sort of a Bollinger Bands or Keltner channel, where the middle of the Keltner channel is the linear regression, and then the upper and lower boundaries would be based on ATR. Maybe ATR within the range, or ATR for the day.
Yeah, so the channel there basically just takes the data from each of those bars, calculates the line of best fit through the middle, and that's just one standard div above and below. So, it is still data.
Yeah, definitely it's data, but it's the same. It's using the same data for the whole range. So it's
No. It's not the same data for the whole. Like, you'll see as that price starts to add more bars, like that'll start to shift, right? So it's just because that's the current number of bars, and basically that would be how your each of your standard divs basically are going to contain all of price action, right? That's what two standard div is. It's like 90. Was two standard, like 97.3, whatever it is, of all price action. That's why it's good. I use them every day.
Yeah, you're looking at you're using the Bollinger Bands a lot, right?
Yeah, but I also use the channel like that because the Bolly bands like expand a little bit too rapidly, and it's based on the moving average, not like the data from each bar. So like if you cross compare both of them over each other, then you get a more solid picture where they actually line up. Because like the Bolly bands will either undershoot or overshoot the total price range. But that sort of linear, that channel will actually tend to cap price. And then you can always add like a third standard div for like absolute extremes on like news, that kind of thing.
Yeah. So what I'm thinking is basically what I've been looking at. I've been looking at the Keltner channel and the Bollinger Bands, and I've tried to understand how can I. So I like the idea of the Keltner channel being based on ATR, and I like that portion of the Keltner channel, but I like the visuals of the linear regression channel. So I would like to try to see if I can combine combine the linear regression channel with ATRs. So sort of like, imagine you have a Keltner channel, but instead of this middle line being a moving average, you have a linear regression line instead of that moving average. But then I'm thinking maybe you can just adjust the moving average to fit the range. But I think it would make sense to see. I don't know. Does that even make sense to you, to use a linear regression line and then look at ATR, like ATR based deviations away from that line?
Yeah, kind of. I mean, that's what the channel is. That's why it's like a linear regression. That's why you get the straight line. Hence, if you want the flux in it, then you're getting closer to a moving average. Because instead of getting like that regression, model, you're just getting an average. So Keltner channels are kind of already doing that. If that makes sense. Without, I'm trying to avoid going into like a math. Giving everyone like a university lecture here on stuff.
Yeah, because you know you're gonna lose.
Then everyone's going to tune out. Yeah, exactly. Everyone's going to be like, oh.
Okay, so basically, what I'm trying to understand here is, I like the visuals of the linear. Of the linear regression line, I like how it looks visually, and I like how it's not really lagging. You know what I mean? It just takes all the data points and the best fit line, and that's it. And to me, that looks like, you know, the perfect target for mean reversion strategy, right? So what if that to me would be like the best visual target for mean reversion strategy? What would be the best entry points? And I think the only way to really look at that would be to perhaps look at add the linear regression, and then maybe add ATR bands right around that line. And I'm also thinking about, it works in a trend, obviously, but in a trend, you might want to be trading with that trend and only go long. But I'm also thinking about looking at how can I. Obviously, a strategy like this would work better in a range, most likely. So how can add something that would tell me when I'm in a range and when I'm in a trend, and that would obviously be perhaps the ADX. We have a comment here. I have to bring that up. So we have a comment from Alexander saying that the Fivers screwed him over. He finished your test with 80% accuracy, which took me 3 months, and I refused to give me funded accounts. Stay away from. So reach out to support, man. We're not in the business of denying payouts or denying people a funded account if you're trading and not breaking any of the rules. And we don't have a lot of rules. So just reach out to support, and they will explain to you why you failed to gain that account. Most likely what you did, you traded in a way that is not okay to be trading. I'm not sure really what type of rule you broke, but reach out to support and they will kindly explain to you exactly what happened with that account. So it's not about, we're completely honest and transparent here. Now, I don't know your specific issue. I might look into it, and then I can tell you what you did wrong. If you want me to do that, I can do that. You can send me an email to Jonatan.r@thefivers.com. I can look into your case if you want me to, and then I can explain here in the live stream exactly what you did wrong and what you should not be doing. So reach out to me and I'll help you out. If support can't help you out, I'll try to do my best to help you out. We're not in the business of screwing people over or not giving them accounts or not payouts. We're here to help people, and that's what we want to do. Let me just quickly go over to AUD USD because I got a alert here on AUD USD. Wow, okay, that's a good.
Yeah, it's just breaking highs.
Yeah, that's a good breakout right there. This is man, I'm long GBP AUD. Not looking good. This is a good breakout though. I'm gonna add a couple of lines here. Add a couple of alerts just to alert me if breakout or if it continues to the upside. Right, so let me actually try this. I know there are. So let's add the linear regression channel with, let's say we do it on the 4 hour, and then we add ATR bands. I think, right, ATR bands. Which one should I be using? So I'm thinking here, the use of ATR bands it's not going to be based on Keltner channel. Basically, what I want is just an indicator that shows ATR on the chart, and I would assume that it needs to be based on the previous candle. It can't be based on the current candle, right? It needs to be like the ATR needs to be based on. So, for example, the daily ATR, that's calculated using previous day's candle, right? And then you're basically looking at how close is the current daily candle getting to the ATR highs and lows of previous candle, right? Or do you look at or would you have to look at it would have to be a look back period on that as well, I guess.
Yeah, so ATR, like normally, yeah, you can set it to whatever you want. It can be a week, the start of the week, the past 5 trading days, if you want to call that the week. So yeah, that's the discretionary part for you to design it, I guess, in the manner that you wish. Another example, if you just wanted something that is another idea of that ATR just from the prior day per the peak points, high low close stuff would be something like pivot points, as an example.
Yeah. So if this indicator is correct, going into set the period to 14. I believe the 14 is the 14, and then ATR band scale factor. Okay, so that's multiplier. This is basically, if I put it at 1, it's going to show me the true ATR of the previous candle, basically, or a look back period of 14 candles. Take profit factor, I don't know why they have take profit factor here. Is this, let me see if I switch this to 1. Yeah, it doesn't do anything.
If you have ATR period, it's going to be the past 14 bars.
Yeah.
I guess. Scale factor is going to be just a 1x, I suppose.
Yeah, unless you want to look at,
Unless, it depends if it's
3 times.
Yeah, it depends if it's calculated again like a 1 sigma, 2 sigma type thing, or just a raw multiple.
Yeah. So what I'm looking at here is the bands. Even if I put it at, let's say 1, they don't get touched very often. Well, they do get touched quite a lot here.
The edge points, or
like the red and the green line, they do get touched quite a lot here on the 1-time ATR.
Yeah, the edge points will, because that'll contain 96% of your is that set on a 2 standard div or a 1 standard div? Because you said
right
1.
Right now it's just one standard div. So 1 standard deviation is that, so 2 standard deviation is that, what's that, 63? No.
That's 96% of all price action.
Man, I should know that.
So one standard div is going to be 70%.
Right. Okay. So it's the other way around. That's right.
It's like 68.2 specifically. Yeah.
Right.
In relation to like a normal distribution.
But doesn't more, a bigger amount of prices fall within the first standard deviation? Or is it the other way around?
Yeah. Yes. Not necessarily, because we're dealing. It depends what kind of system you're dealing with. If you take because like how the market trades, if you're looking at a raw data set, yes, that is where the bulk on, say, a standard bell curve, right, normal distribution, is going to sit. When you're looking at something like a chart, yes, price will tend to spend the most time in that area. So if you think of it that way, as you can see with when the amount of time once you've hit the bottom end to go to the top end, it's very slow to sort of get through there. That's the chunk range. And then that's how it derives where the extension of that is. So basically what it is that once you get to those endpoints on the top and bottom side, the amount of time you're going to spend at that price is very, very likely to be very little. So therefore it becomes that reversion point and you reverse the trade.
Yeah. No,
Yeah.
I'm definitely.
And then it's going to go back to where it's going to spend the bulk of the time in that midsection. Yeah.
Okay, so looking at this,
made sense.
yeah, it does make sense. Now, looking at this, I quite like this though, because if we look at this channel, the channel actually begins where I believe a potential trend started. And if this is the trend, then I do believe that, look at this, you kind of have this market structure, right? So, well, whatever, it goes basically up like this. So either the trend, because it's an uptrend, I believe the uptrends would start at the low, and I think this is where that trend started, and the regression channel basically started when that trend started. So I do believe that this is a correct placement for drawing the channel basically. Now, what I'm thinking is, if this is going to be a mean reversion strategy that is not going to be trading within a trending environment, and I want to see if I can combine, or compare what's the result of basically what I'm saying is, I think this is very easy to be coded into an indicator or strategy, because you have very clearly defined lines. Even if you just create fairly clean and clear rules for entry and exit, and I think it's going to be fairly easy to code. So then what I can do is I can add the ADX, and I can simply just add a filter. I think the filter would probably be have to be adjusted based on the market. You look at most ranges and most trends. When you're in a trend, where is the where is the ADX based on the range? But let's say it's actually very difficult to quantify with the ADX. I think it has to be done on like the daily. But looking at this right here, now I don't think it's as simple as just buying the lows of the channel and selling the highs of the channel. Even though looking at this specific area or this specific trend, it does look that simple. But
on a 5 and 15 minutes, really good intraday. I'll tell you now.
Right. Okay.
It's really good,
and that's
especially when you then line it up with certain prior key levels. And then the other piece that I do, I have a personal indicator I made for CTrader, which creates like a VWAP channel based on the tick volume. And you line these up, and it also allows you to plant that on whatever point of the bars that you want. So you can look through a certain section. So since the start of London, since the day, since the week, whatever, and on any time frame.
Yeah, that's very interesting, because I
should share that with you. Actually, I think you'll find.
Yeah, do that, because I've been doing some research on trying to figure out if I can Right. So the breakout on AUD/USD is continuing. We have strong move on AUD/CAD, probably because we have gold going absolutely insane. It's up over 1% on the day. This is it's crazy move. We've got three daily candles looking like. Yeah, we even have a gap up on the daily here on the Wanda. Small, but still somewhat of a gap up. Very strong move here on gold today. Man, I gotta look at my portfolio.
Gold is mental, dude.
Yeah, this is insane.
This is bonkers. Absolutely.
But do you think this has anything to do with the manufacturing PMI?
Yeah, not so much. I don't think so much. I think there's the portions of just the continued acceptance now of the Fed and where we're going with that, and the fact that liquidity is getting pumped out everywhere. You've got more of the Russian planes entering EU airspace, and my expectation is that at some point, EU is already starting to say more and more they're getting fed up, and there's someone's going to shoot one down at some point just to send a message, etc., to Putin. Again, that further escalates that side of things, that completely unwinds a lot of the Russia-Ukraine type stuff, weakens Trump's position. Trump's position is weakened against Putin, weakens his overall position against every other country. China is definitely putting up a fight. You've got the various growth challenges in the UK, growth challenges in Europe, and then the US is definitely running hot at the same time as we're going to drop rates. Therefore, that tends to lead to quite a bad situation. And yes, I think as well as some of the backdrop of these things of like how NVIDIA and OpenAI throwing money back and forth at each other. Like, how does that make sense? Right? Like, OpenAI buys NVIDIA chips. NVIDIA chips gives the money back to OpenAI, and they're just recycling this, right? It's getting a little bit too wild, like Ponzi scheme ish, which you can view the whole market, the whole economy in that manner to some degree. Same with like housing.
Could you explain that again for a lot of people listening? Because I think a lot of people didn't really understand that. So there's this deal between NVIDIA and OpenAI.
Yeah, so they're basically, obviously, OpenAI buys NVIDIA chips. NVIDIA is now pumping money into OpenAI. So they're kind of just recycling that money. And obviously it kind of, I guess, works for their stock price, and the whole economy is essentially just a recycling machine of money. So when we have recessions or major crashes, that kind of stuff, it's because the cycle system got jammed up. That's all it is. It's just constantly recycling. So you spend money, a company earns that money. Those earnings are then someone else's wages. They spend those wages, you earn the money back. And it's just this kind of roundabout game with this. But once you're getting to these kinds of levels and trying to build this stuff, sorry, my computer's making strange noise. It does get to start
beeping or something.
Yeah,
what that was.
It starts to get very concerning when we're already at sort of all-time highs, and that's when it starts to throw up those alarm bells of the type of dot-com bubble-esque type notions that people are throwing around. Now, these are proper businesses and they are actually going to have impact to the world, obviously. But it just starts to get a bit weird. And same with everything Trump is doing. You've got the geopolitics, positioning of the dollar. If any of these things happen again, there's just going to be massive stimulus QE. It'll probably be different QE this time to last time. So they'll have to play a slightly different game because it'll be a different problem. But overall, the thing is looking more and more stacked to just become a car crash. And I think people are now, just like you were saying before, would you say your portfolio was like 30% gold or something?
60% stocks, 30% gold, and 10% Bitcoin.
Yeah. So the old traditional thing of like 2% of your portfolio in gold, X amount into bonds, and then the rest in stocks as just a kind of typical thing. I think people are shifting out of bonds because now that's going to be a massive risk because potentially these rates have to go up, way up. Therefore, your bond is absolutely in the bin. You're going to get killed on that. And then 2% gold is probably wrong, just as standard, even if the bond situation hadn't changed. Then you get both of those stacked on top of each other. I think there's a lot of people in funds, managed funds, family offices, all that kind of thing, kind of going like, maybe I need like 10 or 15% or something like that in gold. And then especially when it's obviously doing exceptionally well, and you're now sort of outpacing stock performance, plus get that double added safety, looking at everything out there to buy, it's kind of a no-brainer, to be honest.
Yeah, no, it's I mean, gold is I'm honestly, with my long-term portfolio, I'm kind of just following, comments from kind of like a collective of different macro analysts that I've been following, because I'm not gonna, like, what I do is I look at the trends, right? I look at the trends, and my technical analysis will tell me when there's potential signs in price and momentum and maybe the breadth and things like that, when it's maybe time to get out of the market. But the time horizon, the why of what market moves, I have no idea about that, right? But from my understanding, and when I look at my results in the portfolio, gold has been a fantastic hedge against the stock part of the portfolio. When the stock part of the portfolio is not doing well, gold tends to outperform, so that and then gold starts ranging and the stocks keeps pulling higher. So it's like they're almost like they're positively correlated on the higher time frames, which is just insane. Never seen anything like that, really. So I'm making money on both my gold longs and my the S&P 400 index, and yeah, it's wild. It's really wild.
Yeah, the logic would be, so from the early 2000s, how we had the massive run up from like, what was it, off the top of my head, $400 or something that were out on gold. And then we sort of peaked GFC period around 1900, but then you settle down at 1200 was the new base. That was basically cost of production at the time. It was like 1250 for 90% of miners out there or something. So I think people are seeing the same thing with gold here. After it running from 2000, you get that double pump, maybe a bit more or something. If stuff really pops off and we do have this massive crash, I wouldn't be surprised seeing gold at 5K easily, right? Easily. And then probably up towards 6. Now, if you've bought in at a reasonable level and then you do come back off, you've still made a huge multiple. And I think that's what people are sort of recognizing. And especially when you have the forward backdrop going over the next 10 years, 20 years, with the debasement of currency, with everything that's happened with central banks, like, it's the same reason that people are willing to jump into Bitcoin and take a chance on the narrative around the entire Bitcoin thesis. And there's not a small amount of money in there these days, right? So I think it's just off that same logic. And institutions are very much acknowledging that fully now. But when you look at gold or Bitcoin, you're going to buy gold at the end of the day for them still, because it's much safer.
Hey, Victor. Not Victor. You're not Victor. Hey, Pedro. How's it going?
How you doing, Pedro?
I'm good, man. How are you guys doing?
Going well.
Good. Yeah, they're really good. Good.
What was that?
Yeah, I know.
Talking about gold.
LJ, I think I wanted to ask you something. Yeah, we're talking about gold. It's going absolutely insane. Just looking at Bitcoin here, we had a lot of fear of the Bitcoin in the crypto market yesterday. Not really seeing it in the charts. We had a good foundation being built here, I think, for good base for Bitcoin. Gold going crazy. We got a lot of nice bounces on altcoins. So we got the crypto market looking good. We got the gold going absolutely crazy. So not very often do we see the S&P 400 break into new all-time highs after all-time highs with gold doing the same. So I was reading a paper yesterday. Actually, I woke up in the middle of the night, like 2:30, and I just suddenly had this huge urge to read Bloomberg, which is just absolutely insane. Like that is not normal, you know. I definitely need, you know, holidays. I pull up the pad, start reading on Bloomberg. One thing leads to another, and I'm like deep down in this analysis on. They're talking about how the Fed or how the U.S. economy, like how they want to grow out of the what's that? The debt.
The
Basically.
deficit. Yeah.
Yeah, exactly.
And this is where the whole, the deficit and the debt, right? And this is where the whole acceptance of slightly higher inflation comes in. Because the two ways are you either grow your way out of debt or you inflate your way. Now, the growing thing is a probability chance of whether they beat China, and they've got a good shoe-in, but it's not guaranteed. The other portion is that inflation part. Now, that's a very hard needle to thread because equally at the same time, it destroys your consumer base, all the people living there. It's very bad for society. But as far as the government, if they're just playing their game and they, you know, like, we don't care.
Yeah, I mean, it's a tax, right? That's what it is. Inflation is just another tax.
Yeah. And so hence the same thing with stocks going to all-time highs, as well as gold, as well as everything, as well as real estate. I think this is literally, in totality, when you view it all together, it's people just saying, I don't want cash. I don't want fiat. I need to get assets. And the assets, if cash goes to hell, the assets go to bajillion, right? And so at least you're liquid then. Because the main thing is about being liquid, not sitting on stale fiat and then getting burnt at the end.
Yeah, no, it's definitely interesting to see.
Similar principle to COVID when everything blew up, right? You know, if you overrun how much cash was pumped into the global economy, overlay that with stocks, overlay it with real estate, you know, you got 30% new money coming into the global economy. Surprise, surprise. How much house prices up? They're up 30%. Stock market, 30%. Everything, 30%. Like, you know, it's just a keeping up with that. And then so you have to ask, did the assets actually appreciate in value, really? No, just the denominator of total supply of money's increased, and therefore they went up just, you know.
But the value of money has decreased in the same pace as the value of, like, the market has increased. So basically we're at plus minus zero.
Yeah.
Yeah.
Because that's pretty much where all that money is flowing into. So
amazing.
Yeah.
Guys, I gotta take a quick break. I'll leave you to it. I'm sure the people are dying to know what your thoughts are on the gold move here today, which I think is it's not much to say about gold. It's just there's not much analysis to be done when something is in price discovery and just continues higher. Basically, it's just hold on and hope for the best. Basically,
yeah. Don't try step in front of the freight train.
Exactly.
Not yet.
Guys, I'll be back. I'll be back a bit later. I'll see you guys. All right.
All right.
Thanks,
See you
John.
soon.
Yeah. Okay. So, when is going to be the worst case scenario on all that situation where everything's going up? Where is going to be the?
When does it all unravel and fall apart?
Yeah.
So I think through next year we're good. I think we'll have a slight wobble coming into that. So through Q2 next year, I think there'll be a slight pause and a wobble and concerns around the further cutting of rates, whilst things are probably looking pretty all right. And then that's when people get concerned about too easy financial conditions, and thus everything's going to accelerate and start panicking that the Fed will be forced to put up rates And given their reluctance to do that because of Trump, they're going to do it way too slow. And then that's how you get a overcooking and some kind of crash, or it starts to build up, easy money, that whole easy money situation, that someone's going to end up with problems, right? There's a lot of variables in between. Obviously, we got the Russia-Ukraine situation, which sort of got better, now seems to be getting worse. There's other countries getting pulled in. Same with bits and pieces in the Middle East. So there's so many variables you could say, if this, it'll be this period. If this other thing happens within that, it'll be 6 months later, etc. But I would definitely, nothing's going to happen this year, obviously. But once we come towards Q2 next year, it's going to be very eagle-eyed observations across the board. So.
Right. Yeah, because usually the last quarter it tends to be positive, right? Across especially the indices, it tends to be positive. This rally into Black Friday, Christmas, and everything else that usually is quite positive. So if you already have a really positive year, it's going to maybe continue in that direction. Any concerns about that unemployment unemployment rate is going to start increasing much higher than expected, or there's not going to be any risks on that regard? Because one thing that I think Paul said during the press conference, and I think also mentioned a little bit about that, is that yes, the new unemployment, the job cuts is not as much as it starts to be higher, but not in a really bad scenario. However, one concern can be is that there's not many new employments being done, right? Not many people are hiring at this point. So if all of a sudden one accelerates and the other one decreases, that's going to be a problem, because everyone that is getting unemployed are not going to be able to find a job straight away because no one is hiring. Is there any risk that may happen?
Yeah, I think that is their primary reason for actually cutting rates, to help that lower end of business, so small business to medium enterprise, to try alleviate some of that, open up some of the capital spigots for them to potentially keep that growth running strong and they can continue hiring. As far as the current employment numbers, etc., right now, they're not bad. Because you got to remember, obviously, the labor market is a supply and demand of labor. So if you get the lower payroll headline number, it doesn't actually always mean it's bad. It's bad because if there's no further demand, that's fine. So long as you don't have an excess of supply of unemployed people waiting, then you're just golden. Now you've got full employment, everyone's got a job, and you just, run along, right? So that's kind of where we're at, a bit of a new normal, but they have definitely pointed out in a number of times, and same from a lot of the individual surveys from the individual FEDNA members in their own personal areas. When they talk to these smaller and medium enterprise businesses, they have acknowledged for some time now that they are feeling more and more pressure. Then as the sort of inventory loading that all these companies took on to get ahead of the tariffs, as that starts to run down, they're going to have to forcibly put those prices up. So if you can somewhat alleviate their cost base by bringing down certain rates, then potentially they don't have to put the pricing up so much, which then rolls onto the consumer, which then creates the inflation, and then you actually get a problem. So I think their side argument is there could be a logic to dropping rates to actually decrease inflation in that manner, in like a very strange way. But I think that's where they're trying to thread the needle.
It's not going to be an easy job for the Fed, but hopefully the economy corresponds to that plan. Hippopotamus, long time no see. Did you manage to catch the rally on gold? Congrats. So that's a good one. Have you closed already, or are you still on the trade? Just to reply to some of these comments. Trading Slayer, yes, I am Portuguese. Welcome. If it's not the first time that you see us, we do have even a Portuguese channel for the Fivers that we are growing as well. We are really close to 2,000 subs, so go there and subscribe if if you are new, because we are going to do a good giveaway, just like we are doing now for the 85k on this channel. So congrats for everyone as well that you just crossed the 85. Keep subscribing so we can get to the 90 and eventually to the big 3 digits for the 100k. It's going to be for sure. And Jonatan is going to come up with some kind of idea to celebrate that day. João, good morning. What's everyone? Yeah, then people bottoms as well. LJ, is gold rally because of China and Russia buying solid gold? Do you think that's the reason? One of the reasons?
So like we've talked about that in the past in the streams, that has been one of the majority reasons for gold running up through here, up into the 3,500 level, was mainly from central banks and governments buying gold rather than speculative positioning from institutions, traders, leveraged funds, that kind of stuff. Since then, now that leverage position, that trader position seems to be increasing, and that sort of onboarding from institutions is accelerating, and then that's why we're now getting that further pump. Obviously, you're also going to have that continual restocking, not even restocking, rather than just stocking, building up of gold reserves across the globe. At the end of the day, for central banks and governments, like gold is, if you're looking at your total reserves of currencies, gold essentially you can translate to whatever currency you want. So they always have to balance, like how many dollars they have, how many euros, how many this, how many that. If you have gold, everyone will take your gold. They'll happily exchange it for whatever currency. So I think everyone's just cotton on to that. And then you wait until everything settles down. You find out who the players are, who the new shuffling of position is, and then everyone can deploy that gold into whatever direction that might be. So it's very much just a logical safety kind of play. So
yeah. It's just a strange market. Everything's going up. Even the VIX as well. VIX again is going close to 16, and you still have all-time highs on the indices and everything else. This is not normal. At least it doesn't really seems to be the case regularly that we have VIX going up and US indices also breaking all-time highs. It's the second time. Last week we talked about it. This week it continues to happen again. Let's see until when that's going to happen.
That's because a great deal of institutions have been trying to hedge for some kind of a pullback and just sort of cover positioning. And then that hasn't happened. So basically now getting forced to exit those positions, hence the increased volatility, which means you've got buying and selling on both sides. Whilst price is rising like that, it's because those sellers are rotating forcibly. So. All
right. Yeah, maybe we can get into some price action analysis. Because if you have any paper bottoms, nice to see you. Exactly wrong time. Yeah, you got our target. That's good. That's really good. Many people, even on the Portuguese live stream yesterday, many people mentioned that they got the bottom last week on gold and they were just driving the trade, looking for 3,800 maybe as a potential target. Looking at those round numbers have been kind of working a little bit on gold. We saw the 3,500 and we saw the 3,600 and like that. Then the 700 last week. Maybe the next target is going to be 3,800 until we eventually get to 4K. Who knows if then we stop there or not. But if you do have any trades, guys, that you are looking at, any charts that you want us to pay attention, go ahead, share on the chat. My request is to be, if you guys are looking for long, shorts, or what time frame you are looking at, so that always helps us to look at the analysis. All right, so any trade that you are on, LJ, anything that you are trading in particular this week that you're paying attention?
Not quite at the minute, not so much from today. I had some stuff going on earlier. So through last night, caught the short on euro there, and then earlier today, short there, the data coming out. Since then, we've rallied back up. I'm not crash hot on this further rallying just yet, so I haven't decided to jump in on it. I would have preferred to see a further drop in euro dollar. So for now, I'm going to wait and see how this price action plays out over the next couple hours coming to New York to actually make a decision. because I was originally looking for further shorts. Obviously, pound though is looking pretty good after that. We had the data come out, massive pullback, massive dump, I should say. Then we had the pullback after, and that is now rolling back off once again. So we've also got Aussie dollar here, which did crack these relative tops that we've been sort of getting stuck at around 66 from yesterday. That break should take you up towards about 66.30 or so. If we go to, was it 1 hour? We've got some of the levels back up here. So that would be some kind of reasonable target. Yeah, up there about 66.30. But same deal, just with the fragility right now of the pound dollar and then euro dollar kind of in a mixed zone. I'm going to sort of wait. But I do like that break on Aussie dollar, plus this rounding here, the higher low coming through. So
yeah, that's like a little bit of a shift of a momentum on the Aussie dollar. So what do you make of the move since last week towards this week? Do you think that the dollar is ready to continue to move to the upside, or are you expecting dollar to just resume to the downside and vice versa on the euro? Resuming to the upside, or do you see a bit more now of a retracement, a little bit of a correction, because we have been kind of moving just in one direction recently until up to Friday, until Wednesday when you had the Fed. What is your expectation for this move?
Yeah, I have been looking for a bit of strengthening coming back into the dollar. So after the Fed and we had the initial pop, buy the rumor, sell the fact, came right off. We've now sort of consolidated some of this lower area. Euro dollar back up towards that 118. I would like to see it come back off. Reason being, I think this the probabilities for the Fed cuts into the end of the year are probably a bit high. My position right now is I don't think we'll get 3 cuts.
Okay.
Right. So I think they're probably their best bet is just to go again in October and then nothing in December. Right now we're pricing 73% of a December cut. So I think three cuts before the end of the year is probably too much. 2 cuts is probably more likely. So I feel like that needs to come back in line. We're going to find out a lot of that this week. Going forward, I think we've got 10 Fed members speaking throughout this week. And we did also have...
Every day, basically, there's going to be Fed members talking. That kind of... It's always the plan of communication from the Fed. Like, they have the FOMC the week before, and then the days after or the week after, there's always, like, everyone is sharing their opinion, kind of putting the narrative in alignment with maybe what they decided in the previous week. But every day.
Yeah, if the market interprets the Fed meeting incorrectly, then they can recorrect that and give them the hint and nudge.
Exactly.
Which we did get a piece through Wall Street Journal the other day, which the market didn't really move off yet. So, which is interesting because that has been one of their preferred sort of leak points the past number of times, but the market didn't do anything on it last night. So yeah, I am still looking for that turnaround in the dollar. I would have liked us to hold this trend, this channel, a bit better, and then get a more of a clear rebound. Obviously, the price action through Asia today, we did get another little bit of a jump on euro dollar before coming off. So yeah, I'm just waiting for there to be more consistency across some of the majors right now, which I'm not quite seeing. So
I agree with that. I would like to see at least a retest to the top on the dollar, and maybe a retest at the bottom on the euro dollar, and then we'll see. Because I was expecting kind of after Wednesday, I was expecting this correction. The reality is when I do look, then just make pure price action. And the reality is that euro respected last week's low, so we didn't really manage to break a major level structure. And even though the dollar index as well is still respecting that last high that was created, or that actually created this last low. So when just looking at market structure, maybe there's still the need of a proper break to actually indicate that the price wants to continue to move to the upside. Now it's a bit in the middle. It's kind of not exactly the type of price levels that I like to trade. It's literally kind of in the middle between last week's lows and basically the top that we're having now. So a bit indecisive as well in which direction price wants to go in the next for the next move. But I would like to see it go higher, actually, dollar and euro going a little bit more to the downside, to be honest.
116.90 ish is kind of where I've got my next ion for euro dollar. So hence, that dollar strength coming in, that's sort of for the near term. Like longer term, I am still bearish dollar. But just
me too. That's still
for this next period, I think it's due for a rebound. So.
Yeah, I kind of agree on that one. I still want the euro to eventually get 120. It still hasn't really got there yet, and the euro dollar and the dollar index also can go maybe close to 95 or something like that. Maybe eventually going to go. Maybe we can look at a few pairs in here. I think people are asking about dollar yen, then also New Zealand dollar. Just to reply to Daz, I am from Portugal. I'm Portuguese actually, but I actually live in the UK. At the moment in Manchester, so that's where I'm from in here. And also Aussie yen actually, it's an interesting one because it moved to downside last week, and now it's an interesting level to potentially look for a long. We'll see. That's basically what Scalper and GS is looking for. But let's start looking at a few charts in here.
I'll jump over to yours because I might just
okay. Go ahead.
Real quick, and then right.
Okay. Okay. Can even start maybe with the where is Aussie yen in here? Okay, a few of you guys mentioned the yen pairs. Let me just start with the yen index, which is an asset that I always like to look for, just to give an idea of what to expect of the yen pairs. So I always look at the yen index first. So last week we did end up breaking slightly these lows at around this level. We had this slightly move to the downside. This was it was on Thursday as well, kind of after the FOMC. We made out this move down, as you can see. We are on the 4-hour time frame in here, but in reality, when you're looking a little bit more to the left side, we haven't really managed to break a major level of structure, which for me to be more of these lows in here. Not exactly just this one, but this is the structure overall that we basically made this move. So if I do want to see a proper level being broken, it will be more of this structure to maybe start then looking for the yen index to continue to move to the downside. So we are still around these levels, and we actually start to see a little bit more of a reaction again to the upside. So price already moved up, then kind of reacted, left its demand zone and reacted again. I was actually looking for a little bit of a reaction towards this level to try to push at least maybe closer to these highs again. So if you're looking for move to the upside on yen index, we maybe are looking for some reaction to the downside on the yen pairs, individual yen pairs, which is a little bit of what we had on the euro yen today, then on pound yen as well with the news. So I'm having a little bit of that reaction to the downside as basically price on the yen index still respected those lows and continued to push higher. So we have this move on the pound yen, which personally I'm actually still looking potentially for a short in here. Maybe price still wants to go a little bit closer to this level, but the way price has been moving recently, I think pound yen could lead into an interesting short, at least to get closer to these lows. Again, I was looking for price maybe to go a little bit higher first before doing that. So pound yen is one that I'm paying attention as a potential short opportunity. I think price maybe can go back at least into this range. Euro yen personally, I'm still looking for price to maybe fake out this double top that we have at this point. I do like also this compression that we have in here, so just being patient at this point. I do have this level or this double top, so I'd like it to go a little bit higher, and then maybe find the short opportunity. Again, looking to the left side, we are still within this top, which can still be relevant, even though we didn't really manage to break below this level. So maybe even end up taking the top altogether. But on the lower time frame, for sure, you may find some potential opportunities in here to try to find at least a short opportunity. And if you do break below this, maybe this lows and also this trend line, maybe can even try to push all the way into here, because the way price has been moving basically has been respecting every single demand zone. So it cleaned away already a lot of these buying orders in here. So you may have a strong move down eventually. That's the type of opportunity that I'll try to catch on the euro yen, but still being patient. I still want to see price taking this double top first before looking for a short, so I'll wait for that. And then when you're looking at the dollar yen, dollar yen just comes back into this range, and this goes also a little bit in alignment with what we have on the dollar. That's why I'm trying to understand if the dollar does want to continue to push higher, or if it's going to hold these levels and starts pushing to the downside. Because if the intention of the dollar is eventually to continue to push higher, and maybe the yen index, even if the yen index just continues to range where it is right now, maybe we can have that that continuation to the upside in here on the dollar yen, maybe try to get into this next range in there. So maybe could try to find that opportunity. But if the dollar does want to continue to push lower at this point, maybe dollar yen is also going to feel that pressure and maybe try to move to the downside. And if the yen index actually wants to go a little bit higher, then definitely dollar yen may come back into this level maybe before going like this. So that's something that I'll be paying attention. We did manage to break slightly this structure. Maybe we want to go lower first, maybe before trying to resume the move into this upper range. Definitely, as you can see, dollar yen has been ranging quite a lot recently in these last few weeks. More intraday on the dollar yen. I don't know if that's the question that someone asked about. Of course, we do have these structures that you can definitely try to pay attention. Maybe even from this level, maybe we can try to continue to find some short opportunities above something in here. If price starts breaking this level or these lows in here, I think then you can try to, as I mentioned, maybe get back into this level in here at around 146.5 or something like that, before trying to then move to the upside if that's what you want. And just to conclude on the yen pairs, we can look at Aussie yen. So Aussie yen actually start to move a little bit to the downside. This was a correction that I was already looking a little bit on the Aussie pairs. Aussie yen leaded the way, and then eventually Aussie dollar also with the Fed started to move to the downside. Looking left, we are into this structure, but eventually we can go a little bit higher. Okay, so we had this supply. It's also on the daily time frame, I think weekly time frame. You can see there was maybe a fresh supply in there, but eventually we can go all the way to target this top at 90, close to 99, and who knows if we're going to go towards to the 100 levels, and maybe from here actually looks like a nice. It actually may looks like a nice level to look for a bigger short opportunity. If price does go there, and there's literally a space in here. This top never really got to that level, so I would love to actually look for a short somewhere around this level. But before that, there's definitely opportunities. So we started to move to the downside at around this level, a little bit back into this previous level of resistance, support zone. So for the person that actually mentioned that is looking for potential longs on the Aussie yen, this could be a scenario. Okay, to try to go long. We may still have a few zones in here that price can still hold to the downside, to be honest. And I don't know if price does want to go a little bit deeper into here before moving to the upside. So depending on the price action that you have, we do have I don't think it's a double top in here. No, I think actually this will fake out this low, so maybe we can actually start moving higher. We don't need to see these lows being taken, or these highs being taken, and maybe from here we can try to have that move on the Aussie yen. That could be a scenario.
On hotkeys.
Go ahead, sorry.
You're so fast with like drawing. Do you have everything like hotkey to do it?
Hotkeys. I have hotkeys.
Whenever I watch you, I'm like, dude.
But I'm using my pen. I don't even know the name of this. Epic pen, I think.
Oh, do you have an actual like
drawing,
pen that you're writing with? Oh, really?
That's what I have. That's why then when I try to remove it, for example, if I draw it in here, right, and then I try to remove it, 1 second. I use the hotkey and it starts writing on the trading view. That's why sometimes it gets a bit messy. It's better for me to click somewhere else, and then I can navigate. Oh damn it! And then I can use my hotkeys as I want somewhere in here.
Do you have like a pad on your desk as well?
No, not a pad. I have it's just a keyboard with hotkeys. But this is a great software. It's an Epic Pen. That's how we call it. Where you can draw.
Oh, okay. Oh, so no, I thought you had an actual like.
No. It's a hotkeys and a mouse. That's what I have. Hotkeys and a mouse. And that's something that if anyone is watching that is maybe responsible for TradingView, like it would be great if you guys could have hotkeys that you could implement. I would be doing it. Like if I could allocate a hotkey for a brush, for a rectangle, for everything, I'll be I'll be just using it. It's something that is missing.
Yeah, that's
Yeah,
what, that's how I was wondering how you're doing it, because I was
Yeah.
like, I haven't found anything like that.
No,
So-
they don't have it. They don't have. Even on MT4, I have a software that creates the hotkeys directly into connected with MT4. For example, if I want to draw a rectangle, I just press R. If I want to draw a line, I press A. If I want to remove something, I press like it's quicker. Even then to open trades as well. That's why I prefer actually still MT4 instead of CTrader as well. Even though CTrader has a little bit of hotkeys, but they are limited and you cannot really customize them as much as I would like. But it becomes it's kind of for the. I know that you play games because we spoke with I don't remember his name, Richie. I think you spoke with him that you like video games. So it's like the keyboard is on those WASD kind of there where you usually have the fingers. That's where I have all the.
Okay.
All my hotkeys in there. Even to change time frames, it's automatic. I use it as a hotkey. Yeah.
I will say back to as far as the chart, I very much like Aussie dollar longs in general. So Odd yen long, definitely like it. I was talking last week when Jordan was on and had his competition, and Jonatan also talking about the pound odd longs, pound Aussie. And I was saying, like, I don't think so. I think we're falling out of bed. I would be very short pound Aussie. I think Aussie dollar in general is going to outperform going into the year, end of the year. We've got we're getting more and more cyclical strength coming into commodities. The economy is running well. Everything is very stable here. We're outside the tariffs. Euro still has its problems. The pound very much having its own problems, both from the data side and then also the bond market is actually going bonkers. It hasn't fully spilt over. We've had a few instances over the past couple of months where it had a day or two. But the increase in rates has outpaced the Liz Truss event, and that was chaos. So at some point, that's going to boil over even more. And so pound Aussie shorts is one of my favorite.
Yeah, I was looking actually for that. Just to reply to Alvaro, no, I am Portuguese. I'm not Spanish. I do maybe speak a little bit Spanish, but I am Portuguese. But I was actually on that. That was one of the reasons actually that last week I wanted to short Aussie. It was because I was kind of I started noticing that price was correcting a little bit on the pound Aussie and the Euro Aussie, and there is that usually inverse correlation between Aussie dollar and the pound Aussie Euro Aussie. And in my opinion, I think pound Aussie actually managed to break a really important level of structuring here. And my take is that we'll be just looking a little bit at the retracement before eventually price just resumes. And somehow it can be similar as well on the Euro Aussie, maybe not as negative, because we actually even across the Euro pairs and the pound pairs, we have seen actually there's a bit more of a bearish move on the Euro, at least actually on the pound than the Euro. So Euro is actually holding a little bit better than the pound. So maybe we can have a little bit more of that bearish move on the pound Aussie than on the Euro Aussie, but overall still moving a little bit more to the downside, just like we had in here. So we had that massive move. That was another reason I was looking for this correction on the Euro Aussie, and that's why I was looking for that short on the Aussie dollar. Unfortunately for me, price didn't really get to where I wanted, but eventually may have that resume move to the downside also around here. So
the other portion I would say part of that Aussie dollar weakness was due to New Zealand dollar weakness.
Exactly.
And so that cross correlation coming down. We had one day when New Zealand dollar was down like 1.5, 1.6%. And then so hence the Aussie was down like double the Euro dollar and pound dollar. But not because of its own weakness, purely from cross correlation, trading correlation. Yeah, not from actually any sense or reason.
Yeah, I think actually someone mentioned about now New Zealand for us to take a look into it, and maybe we can actually continue to move to the downside. Like we did manage to break this important level of structure, price just retraced, and now we are kind of back into here. So in my opinion, if by any chance price actually does end up breaking this now level where it is right now, I think it can challenge this low, and who knows, it's going to go a little bit further down. And then
I think we should hold on. I think we should hold on. Now. Yeah, I just don't think it just won't run like Aussie dollar. Like if you look at the Aussie dollar chart compared, New Zealand dollar has the same band but with a slight downward tilt, and then Aussie dollar's got the band but with that upward.
Exactly.
take,
Yeah,
right?
that's the difference.
Yeah.
So basically what LJ is mentioning, right? Basically, this is Aussie dollar more moving a little bit, and then you look at New Zealand, it's well, we can see that's the opposite, right? Yeah. Basically, instead of price kind of breaking to the upside in here, actually price actually managed to break this somehow. This was an interesting divergence. Usually, doesn't really see this type of a move between both of them. So that's kind of a different dynamic that we had recently in here. But yeah, it's going to be interesting to see if price does end up respecting this level or not. This basically kind of back into this range at the extreme. So by any chance, if anyone is looking for longs, maybe this could be an interesting level to try to participate on that move. Whatever confirmation you want to look for, this could be interesting. Maybe try to at least go to 50% retracement of this, or maybe even retest this top altogether.
Especially with Aussie dollar breaking up now, that's been quite a strong fall from New Zealand dollar. It's probably due for that. Again, similar deal. They pull each other, tug of war constantly. So if Aussie dollar now is breaking above those heads, we've seen euro dollar just come back off a touch. Same with the pound, and Aussie dollar just has now held that level, and we're still running up. So I'd say as far as a corrective move, New Zealand dollar there, that's probably a good trade. And you've got some very easy levels to rely on and respect. So,
I'm quite divided on the comments. I can see like there is 98 comments that I haven't even read. I'm just going to be skipping some of these. I think someone asked about instant funding. If you don't have instant funding at the Fivers. Yeah, because I my post, instead of just keep updating, because it never really updated in there. Yeah, I think Ken is asking if we do have instant funding. I think that would be the hypergrowth account, where basically you pass the first one but you get paid straight away. I think that's basically the account that you would go for if you want to get
you start earning off the bat 50%. But then just for the first payout, you got to meet the first target, and then after that you can get the payout. So yeah, that's the instant fund.
Yeah, basically. Yeah. Maybe this is a good question for both of us. Any advice how to stick to a few pairs and trade only that? I notice losing more when I look at too many symbols. Pedro, could you also mention symbols you normally trade? Yeah, at this point, as you can see, I have way too many pairs that I'm looking at, to be honest, because I do like to look at this correlation. Actually, LJ may be quite a similar approach to what I'm doing as well. I think LJ also trades kind of different stuff depending on whatever is important in the moment, maybe focuses attention towards that direction, and I think it's quite similar to me. In addition to what's important is also the levels that I like to trade. So I look for reversals in the market, so I need to be patient and wait for price actually to get to levels that I feel comfortable trading. So almost immediately I can eliminate many of the pairs that I usually follow if they are in the middle. But when I do see extremes, for example, last week it was kind of a good example towards the Fed. I waited basically Monday and Tuesday until price actually got really to extreme levels, and then during the Fed, that was the moment that I was interested in trying to trade reversals that end up happening. But I do use a lot of correlation to try to find the best opportunities. And correlation can be, for example, if you want to trade any of the yen pairs, I tried maybe to look at the dollar and the euro in addition to the yen index, and try to see between, for example, the euro and the dollar, which one may be stronger or weaker in that moment. So if the euro is going to be the weaker or the stronger, maybe I prefer euro yen instead of dollar yen to trade, and so on and so forth. And then every now and then I do like to trade US indices separately, because US indices are kind of on their own world at this point. That's maybe closer to US Open, that I try to find any good opportunity if I do find it. Again, even as a reversal trader, so I do need to be patient to actually wait for weakness when price is trading at all-time highs, and goes a little bit similar to gold, where again it's all-time high. So I'm super conservative. Also, I want to see a high being created, I want to see a low being taken, and I want to see a fake out, and after that I'll try to catch a move to the downside. So there's kind of 1, 2, 3 steps that need to happen before I even try to consider trading those pairs at all-time highs for me. Yeah, LJ, what about you?
Yeah, similar deal. So euro dollar, Aussie dollar, and NASDAQ probably make up like 60% or so of my trades, I would say. 70 might be more than that, 70%. 80 even. So probably 60% euro dollar, Aussie dollar, 20 to 25% the NASDAQ. Then I'm always watching other pairs. So they'll be like dollar yen, pound dollar. Those narratives kind of feed into the euro dollar and Aussie dollar backdrop and picture. And then I look at the cross correlations, how they're all moving together. Then I will have the other sort of side yen pairs, so AUD yen, euro yen, pound yen, and as well on occasion bits and pieces like the pound Aussie that we looked at, which I'm never trading that regularly at all. But if I've got something going on the back of my mind where I can see a clear trade idea, I'll then go and find that asset to express that thought process, right? But the bread and butter every single day stuff is euro dollar, Aussie dollar, NASDAQ is probably the major three that I put down. So I would say have something like that, your core competencies, those markets that you understand. It's also easier because then you know all the prior significant levels when you come to the market every single day. If you're bouncing around assets constantly, you're going to miss stuff or, right? You don't have to trade every single thing under the sun, right? Just pick a few that you like, stick to that. You'll be able to build something out of it. And then there you go.
Yeah, it's true. I think you can actually start slowly. Maybe pick 2 or 3 that are actually quite similar. Many people like to trade euro dollar and pound dollar and kind of try to understand the dynamics between both of them. And that's maybe more than enough in terms of opportunities that you'll find to be able to benefit from.
Gold is the other one I forgot. I do trade gold regularly. It's probably like 10%. Again, it's some weeks it's very active. And then other weeks I'll just ignore it completely, right? Gold is a very selective special child, I would say.
Yeah. I think something maybe the reason why you and myself also tried a few or tried tendency to look at the different assets, and I think in the States as well, I think it has a tendency of people that actually pay a little bit more attention to fundamentals, that try to also connect a little bit of what's going on, opposite to just pure price action and just trading what the chart tells us or tells them. I think maybe that goes because I feel if I remember even with my own journey, I think I started to include more pairs when I started to also start paying attention more to fundamentals and try to understand the dynamics of it. Before that, I was maybe just also looking at maybe 3 or 4 pairs and that was it basically.
Exactly. And the rationality with that is because you're going to have the technical structure is going to be there. Like you can just open a chart and you look at it. It's always going to be there. Getting that macro backdrop is going to give you an added confidence level, and thus it's going to be better for your trading outcome as well. So that's the logic for me to add macro fundamental. You don't have to go crazy and get really in depth with this stuff. You can just have do it in a simplified manner. But I would definitely recommend it to anyone out there. You should know sort of why the market even exists, right? Why is it trading? Why is it moving? It is a good idea overall.
Actually, that's maybe the hardest thing to do is actually then to be able to get the fundamental side of it, the kind of how much information and knowledge there is to maybe to learn and make it simple. Like actually then try to dissect it into simple ways and actually try to see what market is paying attention to. It's then the hard bit of it. Because
that's the work part.
That's when you can predict, okay, this is what market paying attention, this is maybe the reaction, is this already priced in or not, like, and it keeps on going, what the others are doing and so on. There is a question from Cherry. Pedro, when you are waiting for all-time high and when you are waiting for all-time high and then low making, what time frame are you using? Okay, maybe that's based on the comment that I made before. I want to see a good level of structure. So actually recently, maybe because of a question that someone asked me, I tried to dissect what type of opportunities or when actually I want to be involved in the market. And I think the answer I end up giving is I want to try to for example, as a content trader, if I want to short, I want to try to short in a moment where the people that were initially shorting are no longer interested in shorting, and the people that were interested in buying start to get a little bit pain because some of their buys are starting to get into stop losses, and when price then eventually gives them reason to buy, they are super excited to buy. So I want to make sure, I want to try to find excited buyers and initial people that were looking to sell no longer interested to sell. So I try to find what type of price action can we lead into that. And it's a simple way, right? Price kind of creates just in simple market structure. At this point, when price breaks this level, anyone that is interested to sell in here is going to be happy, right? Because it's just all price breaking structure. And everyone that was buying on these kind of continuations, they start to have a little bit of pain because most likely they have their stop losses somewhere around here, and they start having some losing positions. And as long as eventually when price now breaks this top again, people that were interested in selling here, they are no longer interested in selling at this point. They are in pain at this point, and the buyers that they got a little bit confused because initially now they think that this is a shift in the market. All of a sudden price breaks again to the upside, they get excited again to go higher, and that's usually when I try to look for a trade. Yes, there's more to it in terms of maybe different market dynamics, but that's a little bit of the moments I want to look for. So maybe there was a little bit of a similar example on gold last week. That's why I mentioned when you did have that spike initially, I was not exactly looking for a trade straight away. Now it looks like the scale is completely off, but this was kind of an example in here. So when people actually, when you did create this top in here and price started to break this level, this looks like it starts to be a break-off structure for some people. And maybe you can see that maybe people try to sell at this point, when price pause in here. Many people try to sell, but this was still not the moment I wanted. When price now goes higher, everyone that likes to buy gold was excited again, but this was the moment actually that I started to look for a sell. So basically after price breaks this level, I try to catch this move towards this right direction. And again, it's just a quick example. It happened with price action on gold in September. So this is kind of an example of what I look for, even though if price still wants to continue to go higher. So especially on all-time highs, I'm always on back of my mind, I'm always thinking that price eventually wants to continue to break highs. Okay, I'm not looking for 10% reversals, 5% reversals, whatever. I'm still expecting price eventually to continue to move in the direction where it is, which is bullish. And bullish and bullish and bullish. But yeah, that's basically a quick example of what I try to look for. Yeah, I'm just trying to go through the comments.
That's all right. We had Bips asking before, New Zealand dollar franc. If you're long, stay long. This is looking quite good. What level did you get long at? I know that you sort of mentioned this a little bit ago, but if you can tell me what level you're long from, that'll be good. I assume it must be somewhere down here. But with where we are now, you've got this sort of cluster through here of these tops from the past day. So that's going to be first point of call. Then got the 100 moving average coming up through there. I think the whole way through this, like you've got very good upside potential. So I would stick in it until you get a full move up to about 46, 60 or so, at least for today.
Yeah, to be honest, I haven't looked at that pair for a long time.
Neither. I did. I always make the joke that Aussie dollar franc doesn't exist. I always say that's fine. So, I'm just like, what is that pair? It's so random.
I can see one of the reasons for that is because can you see the spikes that happen at around the crossover, like when the market closes and opens? Like all those spikes, usually it's around 10 p.m. At least on my time, it will be 10 p.m. On yours, it's going to be different.
For me, it'd be 7, yeah.
Yeah, that would be the worst, especially if you do want to keep a trade open overnight. Just don't do it on those exotic pairs, especially some with New Zealand, because we are going to get weird price moves. We are going to get stopped out, or price is going to get to it never goes to your target, because that's the separation between kind of the bid and the ask. So it's going to be always to go to your stop loss, never to your target in those moments. So at least don't keep those trades overnight if you want to trade those pairs.
Long from 46.44, so yeah, just a touch above where I had that. Yeah, dude, I think you're good. That's a good trade. So this up here, this line coming through here, that's the 50 moving average on the 1 hour just here. If we go back down to 15, you can see you've then got the 200 coinciding with that up by these prior heads, and that's also the pivot level for today. So that's like the midpoint that you should expect to run back to. So at least up to that 46.55, going to be good. I wouldn't be surprised if we get a further run higher from there as well. So you've at least got 20 pips from where you are at this kind of zone, this junction. I would start considering how price acts around there. But for now, that's a great trade. You've got this clear break of this lower structure through here. Double bottom, made a marginal new top, pulled back, ran right on. Excellent stuff. There you go.
Yeah. It can go in alignment with the New Zealand also that we looked at on the analysis. Someone asked, Mabupin was asking about dollar CAD. Do you want to take a look at dollar CAD?
What's dollar CAD doing? I haven't looked at dollar CAD in a little while. I mean, we were looking for that dollar strength to come through, right? So I would say this bucket through here is probably your, liquidity that's going to come in, some sort of buying pressure. As long as you get that, then yeah, I would definitely see longs just off the immediate with that backdrop of our US dollar thesis. When I go to the higher time frames, I will say I don't really like that so much.
Yeah, last week it respected quite nicely that that support level at around 13728 or something like that. I was actually looking to see if there was a fake out happening or not of that double bottom. It respected, and since then it's moving to the upside, and who knows if it's going to go back to the range of 1388 or something like that. Basically, where you draw the lines. Yeah,
I can definitely see that. I definitely do agree, and that's on the backdrop of our dollar thesis we were talking about, and you've got kind of this piece forming through here and this kind of channel where it's just sort of riding up through right now, and you could see it just sort of keep going like that. Given that backdrop of that thesis, I would be like, yeah, okay, this is probably still fine to go long. Without that, I would have said there's probably better pairs to trade, put it that way.
Yeah, that's that. Even the other ones, I think even Euro CAD or Pound CAD have been providing quite interesting moves as well. Pound CAD last week, it was great for opportunity to sell as well. It had a massive.
Yeah, something like that. That has got way more impotence in it, right? That is way stronger. So I would probably prefer to long something like this Euro CAD, and then look for a break of that high and run on. Rather than going dollar CAD, to be honest. I definitely have much more confidence in that.
Yeah. And this kind of goes back to the topic that we just talked about in terms of having a broader portfolio, a kind of pairs that you are looking for, because sometimes it's not the measure that you are going to find the best opportunity. Also, what I mean is not maybe the dollar CAD that you're going to find the best. Maybe actually the other one, Euro CAD and the Pound CAD, can provide a better opportunity than the dollar pairs itself, which is interesting. It's quite interesting, to be honest. I'm going to for example, at this point on the Pound CAD, I'm looking for price to retest maybe the previous high last week and maybe try to find any opportunity to short. So this is the move that I mentioned last week. It also helped because we had not just interest rate from the Fed, but also we had the interest rate from the Bank of England, which actually escalated that big short opportunity on the pound pairs. So we had this massive move, and I'm going to be interesting to see how price may come back into this structure to try to see if there's any opportunity to short again. Now, price, as you can see, keeps slightly taking new highs, but anytime it takes the highs, it's getting shorter kind of the move to the upside. So usually this looks like it's getting closer to a potential maybe bigger reversal, or at least maybe try to retest this bottoming here. But overall, actually in a bigger picture, I'm still expecting maybe price to go a little bit higher. This is still a Brexit move. Okay, this is around June 2026. Not 2016. This Brexit's already 9 years ago. Yeah, this is still
crazy,
kind of Brexit. Yeah, Brexit moves. I still remember that summer was crazy. I remember waking up and seeing the market completely nuts. Yeah, eventually price can even go a little bit higher. But over time frame, I think there may be still opportunities to find some selling pressure, especially with the pound dollar as well wants to maybe resume the move to the downside. And there, yeah. So that's a little bit on the cut pairs. What I'm paying attention mostly. In there. Aside from that, not really much. Oil, once again, oil respected the lows. I was looking again for oil to take this, to take a little bit this structure and to get closer to maybe 61s. It didn't really manage to go there just yet. It kept respecting this double bottom. And now it's moving basically now at this top. Let's see if it breaks. If it breaks, maybe it wants to go a little bit higher. We'll see. But I've been waiting actually for oil to take this structuring here, this support level, and maybe after that getting into this. The problem with oil is that I think depending on the server that you're looking for or looking at, the price itself can be different, or the price section, or where price is.
You got to make sure you're looking at Brent or West Texas as well. You know, which often people look up West oil, and then they don't make sure whether they're looking at Brent or oil, and they come back and go, like,
it's true. But even when you're looking at WTI, so West Texas, I think like this is Oanda. Maybe if you go to IC market, it's different. Maybe even if you look at the data from the fibers, maybe slightly different where it's reacting, and it creates a little bit of a confusion. But yes, I've been waiting because, for example, in here I do see a gap. I don't know if this gap is noticeable as well on another servers or not. So I've been waiting kind of for price to close that gap eventually before going into a bigger long position on oil. The reality is that he's playing around with my level. Not really.
I think the bearish picture is kind of baked in to oil now. I don't think I think getting down towards 60 even is going to be tough. I can't see much more further reason. Like
it will be in this case, it will be just liquidity, just kind of collect whatever liquidity is below this support level, and then let's come back into the 66 mark or whatever it may be.
Outside of Trump continuing to pressure, that he wants oil to stay low and keep low. But the Saudis have already announced they want to pump more. Russia wants to pump more. Everyone wants to pump more. I feel like that's kind of baked in now. Because even once we got all that stuff coming out, we struggled to get back down to 60. It was pretty.
Yep, it's true.
Yeah, so
that's true. So yeah, for example, oil may be one asset that for anyone that likes to trade ranges, it can be a great asset, because most likely are not going to go back to 70s. Most likely are going to be around the 65 maximum, and apparently anytime it gets close to 62, it just keeps buying. So basically, you can keep on trying to trade this range that you have since basically since 1 month ago, and may continue.
Great for
and silver. Yeah, go ahead. Sorry.
I was just going to say great for swing trades to get the positive swaps when you buy a bottom on oil.
Yeah.
Yeah,
that's true. But be careful actually with the swaps on the fibers. Okay, trading oil, it can be.
That might be a different question. Yeah.
That just be careful keeping trades over, especially over the weekend with the fibers on oil. What's your take on silver? That you are looking like silver just continues also to go. Do you look at silver?
Not really.
Next question. Yeah, because looking at the higher time frame, we are getting close to this structure again. I'm going to be curious as soon as we take this top, maybe have a little bit of a reaction, but it just continues to look quite strong at this point.
I'd rather just trade gold at the moment.
Yeah,
frankly. Yeah.
Gold just continues to go. It's the only reason for silver is that at least I still have a little bit of some structure that I can look at, but not for much longer. Not for much longer. At this pace, is going to take the.
Rich in the background.
Yo, what's good, people?
I thought it was Amazon delivery guy that I'm waiting for something.
How are you doing, guys?
What's up, Will? Rich? What's up?
Good and you.
Yeah, not too bad.
Going
Man, not too
strong.
bad. You guys,
Yeah.
you guys were like steamrolling, like you were on a roll. So I thought, I'll come in a bit later. I'll leave Pedro, rant away. And I looked at the time; it was like 5 minutes in. I thought, I better come
Yeah,
in.
no, come in, man. Come in. I didn't pay attention. I was not looking at the clock, man. To be honest, actually, I do need to go though. But I was not paying attention to it. How was your trip in France? Was it okay?
Oh, dude, it was so nice. Yeah, it was so good. Yeah, I'm glad to be home though. Like, as nice as it was, like, dude, my office setup is key. Like, it's so much nicer to be home. So I've got everything in front of me. I got good Wi-Fi. I got unlimited coffee, and I don't have to pay for it. I got unlimited water. I don't have to pay for it. So, truth be told, I'm just glad to be back.
Yeah, there's nothing like like our office.
No, exactly, man. Like, don't get me wrong. I love traveling. I love going away. I've actually booked my hotel for this Friday, Saturday as well. So I've literally been in I was literally in the UK for less than 24 hours before booking my hotel to go off out of Wales again. So no, it's all good, man. But yeah, like you said, there's nothing quite like being in the office.
Yeah, is the presentation ready? Are you ready for Saturday? Is it Saturday, like the event?
Yes. Am I ready for it? I'm ready for 1 out of 2.
Really ready?
Yeah. Yeah. Am I really ready? Mentally, yes. Physically, no. I've gotten most of the presentation ready. Like, I just need to make it look all sexy now. Yeah. So I'm speaking twice. The first event, like I'm ready for that. Like I don't really need a presentation for. That's just sort of speaking on my experience. So that I'm ready for. The other side, I'm like, kind of ready. It's like the skeleton's there. I just need to chuck all the meat on it.
He wants to butler up his presentation.
You know what?
Butler it up, like make it look nice.
Yeah, I suppose.
Yeah, there are tools nowadays that can help you with that. So it's good.
Yeah, exactly.
Yeah, guys, I have to go now. So I'll let you analyze it. I need to go prepare my strategy for tomorrow. You guys are competing tomorrow as well, correct? LJ
yeah. Oh my God, it's me and LJ tomorrow.
Oh yeah, that's tomorrow, isn't it?
Yeah, dude,
I forgot.
I
exactly. I was about to say, yeah.
With other things going on, I've completely forgotten about that. I'm competing with LJ. I'm gonna have to get my head in the mood for it. I'm gonna have to really get my head in the game.
Dude, I was
LJ,
thinking that's in like.
will lie to you. He was talking about you this morning, saying how he's going to sweep the floor with you. You ain't never seen a trader like William Davies. He was saying all kinds of stuff like that. So take every little bit that he's talking now with a whole sack of salt.
Dude, I thought it was yesterday I was chatting shit about LJ.
I thought it was later in the week as well because like I've been like house sitting, like dog sitting the past couple of days or whatever. So it like takes you out of your like regular routine. So yeah, dude, I was thinking like Friday, which I knew it wasn't on Friday,
which isn't even right.
No, it's tomorrow. It's tomorrow. It's 24 hours away.
Yeah, mate, that's wild. It's literally 24 hours away to the minute almost. That's wild. That's super cool, man. I'm excited, man. I don't know. I haven't even got a strategy towards it yet. I haven't even checked the news for. I'm gonna actually do that now. I'm gonna.
I was meant to get a costume and stuff, and I haven't got my.
Oh mate, literally that. I may just go.
I even talked about that so much, right? That's how much.
Mate, literally, we were like bigging it up and hyping up the costumes and all. I haven't even thought about it. I may just. I'm boxing tomorrow morning at like 5 a.m. So I may just not change, and I'll just show up all sweaty and authentic.
I'll see what I have here. I don't know what I have left. I don't have much else other than just ridiculousness, but we'll see. We'll see how we go. But yeah.
That's
anyway,
nice.
we'll leave it in your hands, guys. Because I got to bounce as well. So.
Yeah, before you guys, it's me and Anastasia. So then it's going to be you guys. So tomorrow, guys.
Oh yeah, it is.
Tomorrow.
Yeah, it is.
Yeah, tomorrow.
You guys before
I'm
us.
gonna make sure I tune on early then.
I think Anastasia was looking for the best market conditions, so she couldn't do it last week. I don't know exactly what the strategy is.
She was thinking ahead. She's giving herself.
I'm so glad we
Exactly.
didn't do ours last week.
Playing smart.
All right, guys. Enjoy the stream. Thank you very much as well in the audience.
Cheers, LJ.
Yeah.
See you later, guys. Take care.
See you, Pedro.
All right, guys.
See you, Will. See you, Richard.
Good
See
night,
you,
bro.
chat.
Good
See you
night.
guys. I'll catch you tomorrow, and we'll get these trading comps going. And congrats on 85K. See you tomorrow. Ciao.
You say congrats on 85K? Has someone just
They have 85,000 subscribers.
Oh right, subscribers. I thought someone had like got 80K payout or something. I was like, huh?
Jeez, can you imagine?
Well, I've known a few boys get like 40, 50K payouts, but not an 80K. Like that's
That's next level.
Mate, that is next level. That would be, I mean, that'd be pretty cushy. I mean, I've taken a few grand, but I've not taken like 80 plus. Like that's something. Like, let me know if anyone knows an 80K payout trader. Like, send them my way. I'd love to hop on. Like, let's do an interview or a podcast with them or something. I don't know. Let's get them on live and like we'll just interview them here live on the Fires. I don't know. Just let me chat through the mentality of how they did that.
I'm pretty sure that is Jonatan's job, and that's why we don't see him at the moment, is because he's doing all the interviews.
Well, go away, Jonatan, because if there's an 80K payout sort of trader around here, I'm interviewing him. You can have the 5, 10, 15, 20K payout people.
I was about to say, you're gonna have to bring your fisticuffs out because there's gonna be some swinging taking place there.
Let's go.
Oh, you want to do a face off?
Oh, should we? Hang on. Thumbnail pending. Ready? 3, 2, 1. Aye, bro, that's sick. Hey, Jonatan, see if you can like screenshot that. Hey, that even look. I don't know what it looked like on your side, but
dude, done that for everybody that was doing
that would have been so good. That would have been so good, mate. My side, that looked really cool. Probably cringing everyone out. Anyway, how's everyone doing? What's good, guys? Like, I've woken up. I'm back in the sort of swing of things. You know, this morning I was still a little bit holiday lagged, but you know, I'm on coffee number 2, and dude, I'm feeling it. So I'm all good. I've changed as well, guys. I'm no longer wearing my sliders.
Yeah, mine is still right next to me. So
yeah, but you're in flip flop country pretty much, man. You got like 30 odd degrees today. Like I'm super jealous. Like I've just turned the heating off to my office just because it's warmed up a little bit now. The sun's come out. I don't know if you can see. It's really, really playing with my lighting. But now
actually, today's weather is 28 degrees with a 13 kilometer per hour wind, and it's a bit overcast. But I mean, still 28 degrees.
Dude, 28 degrees, I'll take that. Like, mate, I mean, it was 30 degrees in Loire Valley, and mate, it was so good. Literally, I was there in a shirt and some like cream, like white trousers, like all linen, by the way. And I was sweating. And then the missus said to me, she was there like sunbathing in a bikini. She goes to me, why didn't you put some shorts on or something? I was like, nah. I was like, you'll never see me in shorts unless I'm in the gym.
You are a farm boy, but you're a farm boy with a long trouser tan mark. So only the ankles are tan.
No, mate, literally that. I got like a proper farmer's tan. And I'm talking like brown ankles about that thick. The rest is lily white. And like vest marks.
You're as white as this canvas over here.
Oh, legit. No, legit, mate. 100%. The thing is, like, my partner's quite dark as well. So she actually took a photo on holiday of her arm on my chest.
The contrast.
It looked wrong. It made her look extra dark, but then it made me look extra white. It was so funny.
Like in South Africa, when the weather's like really bad, you'll have people with driver's arms. So we're steering wheels are on the right hand side. So our right arms are usually like way more tan than the left arm.
Mate, I
So,
had that.
like
on the
everybody
way
hugging the side of the door and like driving like this with the arm out. So you always have the driver's arm.
because I got a convertible. I had it literally in the summer. I was driving up to London and back. I had the roof down. It's like 34-ish degrees, I think. I had a burn mark down here from where I was like driving, and then where the sun came over and my seatbelt was, it was just here was burnt. The rest was fine.
Oh, can you imagine what that looks like without a shirt? Like you're going to go take a shower, and usually after you've had a bit of sunburn, shower water is like the rest of your body down from this line is fine, but everything above this, you're like,
Mate,
while you're like in the shower.
I look like a squishy. I actually look like a squishy. I don't know if any of us had those sweets, like pink on one side. Yeah, do you know like the squishies?
No,
Pink on one side. Oh, you know what? I'm gonna have to Google it. Or so someone go Google it. Let's get Richard Butler's screen up, and you can go. Do you know what squishy is?
Is it these?
So that. There you go.
All right, okay. We don't have that here. We have like different stuff, but yeah, white on the one side, pink on the other side. I can see it.
Literally. Also, hey Louis, how's it going, man? Welcome back, Rich and William. Silavox. Sorry, man. Silavox, what's good, man? Hope you're well. Hey, Rashad. Pop, you have skeletons in your closet?
Who doesn't?
Oh, I have some skeletons.
No, who doesn't have a skeleton in their closet? If you don't have a skeleton in your closet, you haven't lived.
Literally that. Mate, literally that. My skeletons come out to play every now and then.
It's like every time you move house, you have to take all of your skeletons with you.
Yeah, mate, literally.
Skeletons stay in the closet. I'm making new ones in my new home.
Nah, mine follow me, mate. Mine haunt me. I ain't got skeletons. I got ghosts.
I was about to say skeletons can't like haunt you. Ghosts can.
Yeah, literally. I haven't got skeletons. I got like poltergeist ghosts. Like they're knocking on walls and all.
Oh, mate.
Guys, what risk reward on average do you normally aim for? Is it dynamic and depends on the market conditions? And what is a good return on monthly bias in terms of risk or R ratio? Dude, that's a fantastic question, actually. On average, my risk to reward is, I want to say 1.5 on average, because I will take a -1R trade or like a -R trade, but most of the time I try and reach a 1 to 2R. So most of the time I will chase a 2R trade. Sometimes I cut slightly early, or maybe like I'll look at my low hanging fruit. It may be like a 0.9R trade, or maybe a 1.2R trade, something along those lines. So it depends if I'm going for 2R or if I'm going for low hanging fruit. It may be like 2.3. It really depends. Do I aim for a dynamic? It depends on the market. Yeah, it definitely depends on the market conditions. So like I said, if the market conditions are looking perfect and there's not a lot of not a lot above or not a lot to the left of me that I want to look for. So for example, now if I was buying from this level here, I'd be chasing this level just up here. So let's just draw a hypothetical trade idea out. So there we go. There's a nice little long, what's that, 13 pips, chasing low-hanging fruit. So that's a 2.2. So there you go. So 2.2R trade. The stop loss, that is always depending on market conditions. So, you know, usually it'll be my invalidation level. So if we got like an invalidation here, then boom, that's where my stop loss goes, or maybe a little couple of pips just below for breathing room. So that's usually where it is. So it's where my trade becomes an invalid trade. That's where I put my stop loss. However, if my invalidation was up here, then so be it. It makes it a 4.2R trade. If it's down here, then it makes it a 1.31R trade. That's how I depend on my R ratio, is dependent on my stop loss, not my TP. My TP will always be either my low-hanging fruit, which would be here or here, or it'll be enough to make it a 2R trade. So for example, if my trade is down here and I'm looking at this, I'm thinking, okay, you know, low hanging fruit's there at 1.6. Can I make it a 2R trade? Okay, a 2-hour trade's just up here. What's the possibilities of that happening? Quite high due to the fact that we have got plenty of imbalance and a retestable area up there. So that's how I'm looking at my risk reward value. Always base it on my stop loss first. So stop loss first, then I go into looking at what is valid. So I hope that helps, mate.
Yeah, mine is similar to Will's, but instead I do static take profit and stop losses. And I always either aim for a 1-to-1 or a 1-to-1.5. So the dependency on whether or not it's going to be a 1-to-1 or a 1-to-1.5 is going to be market conditions. So if we're less volatility, less momentum, 1-to-1, more volatility, more momentum, 1-to-1.5.
Yeah, nice. What about the second half of his question? What are you thinking of a risk reward?
Where was his question?
Let me have a quick look. Just up here. So, what's a good
monthly basis in terms of an RR?
What's your thought?
Well, it depends on a few factors, I would think. First of all, what is your requirements every month for your income, as an example? If you're doing trading full time, then that's going to depend on how much money you need every month, plus savings, plus investment, blah blah blah, and so on and so on. But if it's as a side gig and you're not really dependent on the income, then that RR, a good monthly return, can be, I don't know, 5R, 2R. It really depends on what is your risk percentage, and then what is your need. So I don't know if that makes sense.
Okay.
So Will, as an example, if I'm trading one risk is 1%, but a 1% on a $5,000 account versus 1% on a $100,000 account is not the same. But percentage-wise, it's the same, but dollar value is different. And let's say I can live with 1R a month, as an example, on 100K. I would need 10R or 20R on a 5K in order to get that same amount. So I'm saying there's a caveat to it. There's some stuff that you need to take into consideration. And that's going to be personal. That's going to depend on you. Myself, personally, if I can make anything from 3 to 7R a month, I would be more than happy. And that 3 to 7 is on 0.5% risk.
Dude,
so if I can make 1.5% gain to 3.5% gain a month, I'd be happy.
Let's just put it this way. Like, that goes to show how different traders are. If I could make 7R in a month, I'd be gassed. Like, I'd probably stop trading for a couple of months. I'd be done.
Yeah, but yours are what, like on multiple 100K accounts as an example?
Yeah, that's what I mean. Like, dude, like, I'd be up, I don't even know. I'd be up thousands if I was to make set. I'd probably be up like north of 20 grand, 30 grand. You know, if I
like,
was
it would be nice, but you don't need that. Like,
No.
you don't need that.
To push myself enough to get that, risking 1R, you know, let's say I had 100% win rate, risking 1%, I'd have to take like maximum 7 trades at a 1-to-1R. You know, so that's a lot of trading for me. Like, I could probably do that in a month. But I'd probably do that in a month on average with, you know, losing trades, winning trades, you know, different risk analysis. So, dude, like, if I was to look at risk, 1% return is okay. 2% return for me is good. Anything above 2% for me, I'm like, yeah, spot on. You know,
Good.
2% a month for me is like such a lovely sweet spot. You know, because like you know, I got accounts on a trade copier. You know, not all of them are funded. Some of them are, some of them aren't. But 2% a month for me, return on average, give or take, is a fantastic month for me. That's what I like to look at. Anything more, I think I stretch myself a little bit, and I tend to lower my hit rate, my win rate. Anything less, I tend to start looking at it thinking, oh, I'm a little bit, you know, I'm getting by. You know, I like my luxuries. You know, I like my watches. I've just ordered myself a nice watch winder. You know, I go out in the car a lot. You know, petrol for my comp is expensive. So, you know, I like my luxuries, and I like taking the missus out. I like spoiling her, going out for meals, you know, memories. And, you know, I like taking the family out for lunch now and then. So for me, I need a minimum of 2-hour trade.
Yeah. And that's exactly it. It's like, it's a personal thing. It's going to really depend on what is your requirements and what is achievable. Like, obviously, there are people that have really good RR amounts on a monthly basis. The question is it repeatable? It is something that you can consistently do? No, it probably isn't. So most of the people that do have like these really large risk to reward return rates, they do it like 1 or 2 months in a year, and then the rest of the time they're trying to like gain maybe 1 to 2R, or maybe even battle for break even for the next months and stuff like that. Myself, like I said, anything from 1.5R to or from 3 to 7R, so 1.5% to 3.5% for me a month is perfect. Because remember, I live in South Africa, so if I get paid in dollars, it's times 17. It's like whatever I'm getting, it's multiplied by 17. So if I make $100, I'm making 1,700 rand, and the cost of living is less here than it is, for argument's sake, in the States or in the UK and whatnot. So hypothetically, I would maybe only need $2K a month in order to live comfortably. As an example, I'm not saying that that's the amount, but I'm just saying as an example.
Dude,
if I have
maybe
account,
Africa.
yeah, but what I mean is, like, if I have a 100K account, do I need to make 4R? No, I don't. Do I need to make 4%? No, I don't. I need to make the 2% plus whatever commission I need to pay, and plus whatever split or profit split I'm going to be making. So I can reduce that depending on what my requirements are a month.
Awesome stuff. So hopefully that helps. I can't remember who actually asked that. I know we digressed into that, but I feel like that was a very good question by Sham. So Sham, great question, mate. I hope we've cleared it up, and I hope it's helped a lot of other traders that may be wondering. Anik saying, William, do you know Saro Trades? No, sorry, dude. I've never heard of them. Let me know. Is that Instagram, YouTube? Like, I don't know. Not heard of Saro Trade, man.
Yeah, Joel has said it perfectly. Risk reward is subjective, in my opinion. My focus is simply on consistent profit. He mentioned it 7 minutes ago.
Oh, okay. Oh, bear with 2
just
seconds.
In line with our discussion that we just had for the question of what is a good RR rate.
Saro pulled 87K in a single payout from E8. Anik, if you can reach out to Saro and get Saro to message me on Instagram or on Discord or something, let me know, and I will genuinely do a live interview with him. Like, genuinely, if someone can pull 87K on a live, like, if they've got evidence and proof of that, then yeah, dude, let me know. I would do a live interview with them. Hey, Richard, you guys trade real account or funded?
Both.
Same. Not so much, but yes and no. I predominantly trade funded. However, I do have a personal as well, and I use my funded to sort of fund my personal. My personal is more of a backup. So my first ever event that I spoke at was 2024, early 2024. And it was actually like about the prop firm industry, and it was everything that was going on with prop firms at the time. There's a lot of, I called it the mass migration because everything was being migrated from MT, and it was like moving all over the place. And everyone was like, "Oh my god, this is the end of prop firms. Oh, what are we gonna do?" etc. So that was actually what my thing was about, was surviving the dark ages of the prop firm ambiguity. And yeah, so. I always say I trade both. I don't trade both. I predominantly trade prop, but I do have both as a last case, like just in case sort of thing,
Yeah, both. Same thought pattern. Let's say, for argument's sake, you're busy going through an evaluation and you're somebody that takes a little bit of time to build your evaluation accounts. Having a personal account that can pay you, or that you can take withdrawals from, can help you in that journey while you're still working through an evaluation account, as an example.
Awesome. Yeah, literally. Just trying to catch up on chat. Literally scrolling all the way down. Yeah, guys, I am.
Somebody that asked about the giveaway. I believe the giveaway is only tomorrow. So the entries is today. It's linked in the pinned comment. And then I believe if you do read there, it'll say that the winners would be shown tomorrow or picked tomorrow.
Yeah, awesome stuff. I'm gonna ask this question, or I'll read this question out from Pedro, and then I'm gonna ask. Oh, never mind, he's in.
Hello.
Oh, hello. I don't even think Griff was expecting that.
Griff was like, "Oh."
I was like, oh, I'm on the screen now.
I'm
Too.
in.
Hi, everyone.
Oh my God. Thank God you weren't picking your nose, mate.
I was about to say Remy's on the ball today. She's like, or he is like this. Bah.
Yeah. Remy's like, boom, Griff's in.
I'm in.
Surprise. What's good, Griff? How you doing, man?
Yeah, I'm all right. Thanks. How are you both?
I'm good, man. I'm good. I'm not too bad. I've had a good day so far. Haven't taken any trades though. It's a shame. I haven't taken any trades.
I took a loss.
Not
You've
bad.
lost. Oh, was that GU?
No, it was an EU trade.
Oh, was it yesterday you took the loss on GU? I can't remember. I remember you saying to me, dude, like they roll into one.
I took a loss on GU, and then today I took a loss on EU.
Okay.
I thought we were going to push lower, and then we didn't.
Yeah, my trade actually yesterday. Do you remember, guys, that I drew this trade out on Euro USD? It actually hit a full TP. I mean, we hit some deep drawdown. So I entered here. If you didn't get tagged in, you wouldn't have hit TP. But if you left it on, you would have got tagged in eventually. Consolidated, it really would have tested your stomach. But there we go. And then it would have hit a full TP. So that was super cool on EU. That was yesterday live. I actually drew this up. Same goes on GU. GU, I drew this up. No, I was already in this. Was I in this? I was on the 5, wasn't it? Let me have a look. Yeah, it was on the 5. So I'm pretty sure I drew this up. Again, I was too late. The move had already happened. I think by the time I actually drew this up, we were about here. So I did draw it up and have a look to see hypothetically what would have happened. We took the entire day pretty much in drawdown and then eventually broke through and hit a TP. So that was really cool. My move actually played out on GU. But this EU was the really nice trade. So this was Richard Butler's trade. That it was like Richard Butler's strategy, but with Richard Butler's analysis, but with my strategy. So you hit a TP at a 1 to 1.5, whereas I wanted a 2. We would have both hit a TP on that, which was really, really cool.
You were going to ask, or were you going to read out a question from?
Oh, sorry. Yes, yeah, but Griff magically appeared and distracted me.
Reminds me of the Pokemon games. A wild Griff appeared.
Yeah.
Pedro saying, how do you keep calm when you lose many trades in a row? Again, this is a great psychological question. I'm sure Griff, myself, and Richard Butler has a great answer for this. So, Griff, I'm going to hand the reins straight over to you, man. I'm going to chuck you in the deep end. How do you keep calm during a drawdown stage?
I think a lot of it is experience. It definitely gets easier over time. But in my early days, when I'd experience a loss, just maintaining sight of the bigger picture. And you can do that quite easily by having affirmations in the morning, just to remind yourself to look at the larger sample size of your trades, not at your trades on an individual basis. If you know your strategy really well, you'll know the kind of max drawdown you can expect. So it's not really scary when you get 5 trades losing in a row, because you know that's normal. So that also really helps. And, worst case scenario, you can just go for a walk or have a journal and think about it. And quite often, by the time I come back from a walk or journal, it's completely gone, if all else fails.
Sounds like the right approach.
Yeah, it's been refined.
What about yourself, Rich?
Well, going through drawdown periods is... I'm more of an analytical person. So going through a drawdown period, I always try and look at it on an analytical kind of way. So obviously it sucks losing multiple trades in a row, but I know that my strategy has losses programmed into it. So I know that my process is going to have losses. And I kind of look at that individual trade and say, you know what? It's part of my plan. It's part of my plan to lose this one trade. I don't know where they're going to land, these trades that I'm going to lose, but I expect there to be losses. So I expect there to be a loss, and in so I mentally prepare myself for multiple losses. Because at the same time, you can have multiple winners in a row. Like you can have multiple trades just run in your direction. But I kind of do the same thing that Griff does. I don't look at that trade as an individual moment specifically, but rather part of the larger picture. But at the same time, I also have rules in place that prevent me from having more than, for argument's sake, 2 losses in a day, as an example. So take it day by day. If I had 2 losses today, tomorrow is another opportunity for me to attempt to make some winning trades again. Don't focus so much on the past. Focus more on whether or not it's still within your trade percent, your expectancy, let's rather say. So I'll always look back at my expectancy and say, I expect to lose X amount of trades. I have lost 2 today. Tomorrow I lose another 2. The day after I lose another 2. Is it still within my expectancy? Yes, it is. I'm fine with it.
Yeah,
That's
nice. I just run around with waving my arms in the air, to be fair.
Punch a couple walls.
Yeah. As long as they're not people, I've been told that's okay.
Yell at a couple of kids.
Yeah. As long as I ain't going throwing things around the place. I've replaced my monitor 6 times. No, I'm joking, guys. Like you said, it's just like you said, handling the drawdown side of things. It is tough going, but you've got to take it into consideration that it's going to happen. I think my longest drawdown is 6 months. That was my longest. And what I mean by drawdown, I mean it was losing, winning, fighting for break even a lot of the time. So it was just 6 months where I earned nothing. And it's just trusting the process. Trusting the process. If you are going through a 6 month drawdown period, that's quite a while. If you know that your trades should be, coming through the other side at that point, maybe go back and do some testing in the back end, move over onto a demo account. I am a massive advocate of demo accounts. A lot of traders hate them. A lot of traders will say, demo accounts are for fake traders. I think demo accounts are there to make sure that traders are protecting their capital and protecting their equity, certainly when they're going through either a drawdown stage or like a mental exposure, like a psychologically challenging time. So always don't be afraid to use a demo account. It's not taking a loss. Using a demo account doesn't mean that you're losing as a trader. It doesn't mean that you failed. It doesn't mean anything. It just means that you're going to take a step back and do something to learn without risking your own money. So if you're finding that you're a little bit worried, or you're going through a bit of a drawdown stage and you're not sure whether you're actually going to recover this drawdown, and you're thinking, I'm questioning my strategy a little bit here. Protect your capital, protect your equity, move over onto an identical size account on demo and just trade it the exact same. Don't do anything different whatsoever. It just allows you to maybe, try and push through that fog and through that sort of thick of it without actually risking your own capital.
I don't understand what is the hatred towards a demo accct.
It's because you can't make money on them.
Yeah, I think it's just because it's fake money, man. I think people see...
where do you want to lose money? Do you want to lose money?
Mate, literally, I keep, you can't tell these people.
It's a tool that I think is incredibly valuable, especially when you are either testing a new strategy 100%. Or you're testing a bot or something, and you want actual data. But it's also somewhere, for argument's sake, if you are going through a bit of a psychological barrier, like a roadblock that you're struggling with, and you're bumping your head against something, and you have FOMO or you have revenge trading or something, instead of going and blowing your capital, go straight over to your demo account and go and trade to your heart's content on your demo account as a means for an outlet, as for an example.
Yeah, no, literally that, mate.
I think it shows how people focus way more on making money than protecting capital.
Yeah.
focusing on winning trades rather than protecting yourself from losing trades. Because it's funny, as a side effect of protecting yourself from losing trades, you're probably going to be making money. So it's better. I think it's always better to approach trading from like a really defensive kind of perspective of protecting capital first.
Yeah, like your job as a trader in straight from the get-go is to be a risk manager.
Yeah.
You're supposed to manage risk. And it's one of the first things that I learned was risk management long before I even started looking at a strategy as an example. It was purely just risk management. Obviously, from my poker days as well, risk management is like integral. It's like one of the most important things that you can do. So just taking that same idea and understanding that. And there was a question. There was a question where somebody asked that is perfectly in line with this same topic that we're having now, where they asked, why are people trading micros when they're doing their evaluation and then switching over to minis when they are funded? So a mini, I'm assuming, is smaller than a micro. So when you're doing your evaluation, you want to get out of that evaluation as quickly as possible. But the moment you are funded, you want to protect your capital. So you want to be able to trade as long as you can with that funded account, so you drop your risk. And it's the same psychological effect as being a risk manager. Your time is valuable, but at the same time, you want to ensure that you can have longevity in the game. And that's where the risk manager must take over.
I see the same thing like the other way around as well. So yeah, I agree. I see people do really well in the challenge phase, and then they pass it, and then they just up their risk and go crazy, try to make money. But then there's the other way around where they just try to gamble their way through the challenge phase, and it's like, once I pass the challenge, then I'll trade with good risk.
Yeah, I see that all the time, mate.
So it's terrible. Just do good risk management the whole time, you fool.
Mate, literally, I think a lot of the time as well is people chase money instead of protecting it. Like I saw this thing on social media a couple of days ago, and it was, anyone can get rich, not everyone can stay rich. And it works perfectly hand in hand with funding. Everyone can become funded. Anyone can do it, but not everyone can keep funded or stay funded. So, like, for example, this account that I'm trading with at the moment is a 100k live funded account with the fivers. I traded it live on stream. I passed it live on stream. Everything I've done on this account was within my streaming hours back with LLTF. I did absolutely everything in front of people, and I refused to take a trade off stream. And I got it funded. I passed phase 1, phase 2, and I got it all the way up to, I think it was like 3% before then going into a bit of a deep drawdown. I got into like 7% drawdown. I've now clawed a lot of that back. I'm back into like 5% drawdown now. But point being is, had I have had that mentality of, I need to chase this money, I need to get as much profit as possible, I wouldn't have survived this account. I probably wouldn't have even got it funded. However, what I did do was I protected the capital. And I think that's how you stay funded compared to how I'm getting funded. A lot of people will go, okay, I need to get funded quick. Boom. Now I'm funded. Okay, well, what are you chasing? You're going to chase profit? Well, like, where's the target? It's like looking for low-hanging fruit on gold at all-time highs. Well, there's nothing to your left. You're at an all-time high, so there's nothing to chase. So if there's nothing to chase, like, you're just going to lose. So therefore, you need to make sure that you're protecting. Like, the stop loss is more important than the TP, because there's nowhere to put your TP. It's the same when it comes to funded accounts. You need to make sure that you're protecting your capital underneath you, and then the profits will come. Just sticking to a process. And I think a lot of traders need to realize that. And that's why a lot of traders will size down. Even myself, I size down a lot when I'm trading live funded compared to evaluation funding. Is Vinny as well? Hello, Will and Rich. Miss you guys. We miss you.
Griff.
And Griff now. That, in all fairness, that was sent before Griff magically appeared.
Yeah, it was.
Yeah. Hey, Richard. Good to see an actual trader from South Africa. I'm assuming.
There's a few of us.
I was going to say, are the rest fake? I'm in Cape Town. Hope we meet one day. King James, King Julian. I love you, King Julian.
Julian.
Welcome to our hour and a half of just madness, guys. We do trade, but we have fun. Louis Shepard, what's good, Louis? Hey, Griff. Rise and shine. Miss you too, sweetheart. Oh, aren't you guys cute? Dude, I'm so fucking
nice.
So, Griff, how has your week been last week and yesterday so far in terms of trading and in terms of life? How's everything going with you?
Yeah, thank you for asking. I mean, last week, I think the markets were mostly just corrective, at least with my strategy, my current strategy anyway. So I haven't had any trades in the last week and a day. But I did have a trade on the 11th. That was my last trade. So that's like nearly 2 weeks ago. And that was just a little 1% winner, which was nice. And then in personal life, yeah, I'm working on another strategy behind the scenes. So I'm waking up at like 6 a.m. every day and I'm backtesting for 2 hours. That's how I start my mornings.
Nice.
I'm looking for a different approach because I think I've said this before, but my strategy, very big wins, but very low win rate and low trade frequency. Which
He's
is kind
going
of,
on the 5-minute time frame.
yeah, you know it. To be honest, looking at your charts, the 5-minute price action does look really nice. It looks
nice.
it looks appetizing.
Yeah, the
I've
5
been,
minutes is such a sexy time frame.
It does look really good, honestly. I'm seeing a lot of price action that I like the look of. But yeah, I'm working on a strategy where it's much higher trade frequency, much higher win rate, but lower risk reward. And I'm hoping I've done like 2 years now of backtesting, and I'm hoping maybe a couple more months and I can implement it live, because on my YouTube channel I'm doing a series where I'm trying to pass a 5ers challenge live, and at the moment we're on month 7, and I'm at the profit target on phase 1, and I'm just trying to get the minimum trading days. But I'm thinking, I don't know if I'm going to have enough because I'm trying to do it all in 12 months, right? I don't know if I'm going to have enough time to pass phase 2 and kind of get it over the line in the next 5 months because of my low trade frequency. So I'm hoping I can get this new strategy ready in time to start trading it on this challenge.
Putting some pressure on you, I was putting some pressure on.
Yeah. Normally I wouldn't put a deadline. I just take as long as I want. But I'm thinking this adds some
12
stakes.
months. Go on, you got this, mate. We believe in you.
Yeah.
Thank you.
I'm going to go and have a look at your YouTube channel. I'm going to give you a subscriber follow and start watching your videos a little bit. And I'm going to start egging you on to start taking more trades.
Yeah,
thank you. I'm going to just start spamming you with 5-minute time frame stuff.
Hey, look, Griff, look at this winner I got in the 5 minutes.
Yeah, look at this. Look, this is all 5-minute time frame trading. Yeah.
Yeah, this looks really nice. It looks like a flag is setting up on gold. Like I would take a buy if we moved a little bit lower. But yeah, I'm just not getting any entries that fit my plan.
Well, mate, this is what I looked at. This is what me and Rich looked at this morning, and we had the breakout and it was stunning. But I kind of thought we'd get a bit of a pullback or maybe some sort of slow price before that big kickoff. But nah, dude, there was nothing. I honestly, I wanted, originally, I wanted to see this. But
yeah, I can see
apparently not. It didn't want to happen. So, dude, gold has been wild at the moment. Like, we're nearly $200 away from, we're what? $218 away from 4K. Dude, price action on gold is savage at the moment. I mean, knowing my luck, though, by the time it comes to actually implementing my gold strategy, gold will have changed its price action. So
it's crazy to think. I mean, gold, normally, like, it's not too, like, the last 10 years, it's kind of just been stagnant. And then in the last 2 years, it's doubled in price.
Yeah,
so it's really interesting to see.
Right, it's been wild.
I think it was LJ and Pedro that were talking about this earlier, and they were talking about it seems as though there's more people that are trying to, that don't want cash. They don't want the fiat currencies. They want to start putting more into something like gold or into Bitcoin or something like that. So definitely over the last 2 years, you've seen a lot more of that idea come into play. And it's it's pushed gold to all-time highs, and I do not think that gold is going to slow down anytime soon and go back to where we were, let's say, a year or 6 months ago. That kind of
The
like thing.
gold will never go back to where it was. I can't see
Don't
that.
think so. No.
No, I can't see gold going that
I can't
far.
say no. I can't say no, it will never happen, because anything is possible. But the probability of that happening is so slim based on what we're seeing right now, with people wanting to move their money out of fiat currencies and more into either stocks or bonds, or in this case, gold and crypto.
Yeah, 100%, man. I can't see it dropping that much at all. I want it to slow down a bit. You know, I do want it to slow down a little bit. I don't want it to stagnate. I don't want it to oscillate around and do nothing. I do want it to slow down, because at the moment, the rate that we're hitting 3-4K, we're going to be at 10K in no time. You know, and I don't know if I'm prepared mentally for gold to be at that sort of price. You know, like that would, I don't know what world that would look like. So we'll see. We'll see how it goes. But due to basic supply and demand, I don't think that'll ever happen. Well, it will, but maybe not anytime soon. Also, guys, this was Euro Yen that I placed again. This I actually placed in front of you guys, and I actually drew this up live on stream yesterday. And it actually happened. It worked out really well. So we came up. We didn't quite take this break and close above. On the 5, I think we did. No, we didn't. We worked it as well. And then we did, however, move down, have a break-even bounce, come into a little bit of drawdown down here, and then boosh, straight up to TP. So that was super, super nice. That was on Euro Yen, but I'm not seeing anything today. You know, we had pound news out. You know, pound tanked a little bit, but didn't really do much. So I don't know. Price action is a bit iffy at the moment. We haven't got anything now until 12:30. So we got what? A couple of minutes. Is it 12:30? Am I right with that?
Well, have we got a news event coming up?
Yeah, I'm sure we have. No, we haven't.
Right.
Sorry, guys. I was looking at tomorrow. I was looking
at 14:45 UK time.
Yeah. We got nothing until 2:45, 2:45. There, we got flash manufacturing PMI. I was looking at tomorrow. We've got 12:20. President Trump speaks. Mate, that's going to play right into LJ's hands.
Yeah, that's tonight. We've got President Trump speaking, and then Fed Chair Powell as well.
Yeah, well, 12. Oh no, that's 12:20 a.m.
Tomorrow we have very little news. It's yellow and
12:20 a.m. I saw PM.
Griff, what have you been looking at today? Like, you're talking about you've been backtesting a new strategy. You've got 2 years worth of results. You still want a few more months of results, obviously, before you implement, which I feel like is a good way to approach it. But in terms of what you're looking at, have you found anything this week so far that kind of informs your new strategy?
I haven't been looking at it too much, because I don't want to inspire myself to kind of start trading it live, because it's always quite exciting looking at a new strategy. I feel like if I saw a trade and it won, I'd be like, oh, I could have taken that, you know. So I'm just not looking at it live. I'm only looking at it in backtesting, and in live trading I'm still just focusing on the same strategy for now. But I'm liking the look of a couple pairs actually. One of my best entries is a reversal entry. Super simple entry where I'm just looking for price to be either descending or ascending, and I'm just looking for a shift, so a large candle breaking above the previous high, or for a short, just a shift breaking below the previous low like this. And I'm kind of seeing that right now on NJ. And if you look back at when I look back at my stats, my reversal entry has a 80% win rate. So I'm hoping they don't play out. They don't appear super often, but if we're able to retrace down here without too much shift in momentum, this would be a really nice reversal entry. And I think AJ is setting up a bit as well. I'm not such a fan of this one though, because this is a bit more flat than descending. I'd say it was descending over here, and then we kind of just moved into a range. But NJ is looking really, really promising. So I've got eagle eyes on this right now.
Yeah. So do you do you usually see it as trend consolidate break or trend consolidate drop? You're waiting for the trend, then consolidate, and then do the reversal break.
I don't even need a trend, but that would certainly help. Like if we had a big move over here, this would be fantastic. Generally, I'm just looking for a descending channel basically anywhere. Just the longer the channel, the better. In this case, the channel has been going for 11 days. So that's a pretty good sized channel. I'd be happy with a channel which is only like 3 or 4 days old, honestly. And then, you know, I find that the size of the trade is determined by the size of the channel. So if we had like a 3-4 day channel, I wouldn't be surprised if we kind of managed to reach the tip of the channel here. But with an 11-day channel, I wouldn't be surprised if we kind of reached these levels up here a little bit more. So it has the potential for a much larger trade. The benefits with NJ as well is that it really likes to move from channel to channel. So in this case, I wouldn't be surprised if we came back down, tapped my entry, and then we kind of got a larger channel like this. And this is really beneficial because the way that I do my trade management, I don't have any TPs. I just trail the stop loss below the lows each time we break a new high. So on NJ, a reversal would just be the dream. But I don't think I've had a reversal since, let's see, last reversal I had was September last year on this pair. If I go to it, you can see that was a little winning trade. But you know, there was actually, if I jump to December, there was a pretty nice reversal over here at the end of the year that I missed as well, which made like 10% just to kind of illustrate this entry and how good it is. I think I normally go for 15 pips on this pair, but you can see I trail my stop loss here, like this, and then I would trade it here, pull back, turn it there. So this would be like a 7% winner with a 15 pip stop. Funny enough, sorry, I know I'm going on. This
No, I love this. This is great.
This entry, for some reason, so this is December of 2024. If I go to the exact same time of 2023, so December of 2023, there was a very big winning reversal here as well. And this one I actually took. So if you're looking at NJ and it's the end of the year, keep an eye out for reversals. They seem to do really well. But yeah, as I mentioned with this trade over here, the one setting up live, I've got hope that we'll return down here with no shift. And yeah, this is what I'm really watching out for right now.
That's pretty good. I like that. Now, the question that I have for you is this channel and break and reversal that you're looking for on the 1 hourly. Sorry, my voice just broke there. On the 1 hourly, have you tried looking at it on, for argument's sake, the half hour, the 15, the 5?
I've not. Since I started trading 5 years ago, I've only ever looked at the 1 hour time frame. I've never looked at any other time frame. That's just the way I've always done it. I mean, it's the way I was taught to do it, and I've never kind of ventured beyond that because I feel like I've really mastered this one time frame style of trading now. I'm always open to new ideas. Like, I recently looked at a refinement for my flag entry where instead of taking the first retrace candle on the 1 hour, I'll actually drop down to the 15-minute and I'll look for the first retrace here instead so I can get a slightly better price. So I am open to looking at other time frames, but yeah, the 1 hour only is the style that I kind of teach.
Yeah, because I think it, especially for somebody that is taking one trade ever so often, the same idea can be reduced down to, or if you reduce the time frame down, you might get the same type of trades, but just a little bit more frequently. I think it's worth having a look at, especially for someone like yourself that is busy, let's say, testing a new strategy, but you've also mastered not only the time frame but the strategy itself.
Yeah, that's true.
Maybe just a slight adaptation and see if there is any merit to you even bothering going down to the 15-minute as an example.
It's a good suggestion. My issue with that is that I feel like I'm quite data oriented the same as you. So I don't know if I'd feel comfortable changing strategy without changing time frame without having tested the strategy on that time frame over years and years of back testing like I am doing with this other strategy now. I was just looking at gold and I was thinking, wow, there's a really nice continuation earlier that I could have took. I can't see it now. Right here. And I was thinking, I could just start trading my strategy on gold. I'm sure I'd get a couple morning trades because it's trending so nicely. There's a cheeky 1 to 1.6. But I don't know. I've got it. I feel like I have to backtest it for multiple years before I can do that. It's just the way I've always done it. The 6 pairs I started off with 1 pair and I was trading that, and then I would backtest my second pair for 5 years and I'd introduce that. And that's the way I've done these 6 pairs. I've introduced them really incrementally after having backtested them for several months at a time. I've never just taken my strategy and put it on a pair that looks good,
Yeah, but that's a way of staying. That's called risk management. That's what every trader should do.
Yeah, I don't know if it's me being stubborn or sensible, because I think
it's a bit of both. I think sensibility comes through a little bit of stubbornness.
Yeah,
I think there's something in the line of data exhaustion, where it doesn't matter how much more data you add, it doesn't really change the outcome in a significant manner. And if you have 5 years worth of data, what is another year going to do? Is it going to add to your bias, or it's going to change your bias? Is going to, so
yeah. If I were to introduce a new pair, I'd probably just need 1 to 2 years initially, but that would still take me a couple of weeks to do and to refine. So yeah, you can kind of see why, at least with the approach I've always used, why I'm opposed to adding anything new to my old strategy right now.
Fair. I understand that the sentiment completely, and being a data orientated person myself and a little bit more analytical as well, I always feel like there might be more data available. I can add a little bit more. And my brother taught me that, listen, what is this extra data going to help you? At what point are you going to start implementing, as an example? And it's just it's finding that balance that is very difficult for analytical people to decide. Now it's time.
The point of diminishing returns kind of thing. Because you can put the exact same amount of time in, if this is time and this is results, eventually it's just not worth continuing beyond a certain point, because you're going to be spending way more time and getting not much more results.
The net result is not going to make any much more of a difference. No, I understand that.
And I appreciate your suggestion, by the way. I'm not just saying no. I love having...
Shut up, Richard.
No, I'm so open to discussing new ideas. And that's my rationale for not doing that. And at the moment, I'm just all in on this new strategy that I'm working on, which I'm excited to trade live as soon as possible.
It's that excitement as well, man. It's that when you're testing something new, you just want to go live with it. You're like, oh my god, it's just this excitement. It's like going on a field trip. Do you remember as a kid you'd go on a field trip and you'd wake up that morning excited to go on that trip? That's how I'm sometimes. If I got if I got a strategy that I'm testing, or if I got something that I'm doing in the markets, or not even in the markets, with my Apex Brotherhood company, me and my brother are super excited. We're at the moment, I just got a message regarding some clothing that I'm currently designing for me and my brother, and it's a tracksuit, or it's jogging trousers. And dude, I'm excited. I woke up this morning and I messaged my brother because he's coming back to Wales today. I was like, dude, we got to go to the warehouse. We got to go check this out. I woke up and I was excited about it. And it's the same with trading. You wake up and you're like, oh my god, today's the day I go live, or today's one step closer to going live with this strategy. And it's that excitement. And I think that us traders get, it's addicted to the process, and it's good. You've got to be addicted to the process.
I think a lot of people are addicted to the outcome, aren't they? And then they end up, that's where you end up getting mistakes.
That's where you get chewed up. You know, you get addicted to the process, then you see the progress. You know, you get addicted to the outcome, and then, well, you know, it doesn't always end
You're going to
well.
get humbled.
Yeah.
Yeah.
I try to say in the most polite way possible, but you're going to get munched.
The thing is, when you look at the process, and if you are process orientated, progress with process is the process itself. Like you can physically see the progress happening, and
Yeah.
there's no like profit as an example. It's just following the process. And then when you're profit focused, when you start losing, it's going to impact you mentally, and then you're going to feel like you're regressing instead of progressing. So the idea of being process orientated is a blessing and a curse at the same time, because you can get completely overwhelmed by the process as well, where you're like only focusing on the process and you're not actually trading. Versus if you don't follow the process, you're probably not going to be all that profitable, or you're going to not have consistency in your profitability, as an example.
Yeah, 100%. Yeah, no, literally that. You got to say, you know, stay consistent. The thing is, when you're process driven and when you're process obsessed, you start realizing what you need to do, like staying consistent. It's part of the process. You're like, you want to be more consistent than you are profitable, because you know that consistency will lead to profitability. You know, the minute you want to be more profitable than consistent is you're not going to see that progress. The minute you want to be more consistent than profitable, you're going to start seeing progress.
But once again, easier said than done.
So much. Yeah, absolutely, man. It is so much more easier said than done. However, it is done and it is spoken about. So those who say it and do it can be two different people. But the ones who say it and actually do it and genuinely put in that process are sitting on live stream right now, profitable, funded, getting paid.
We have some good
I think they're going to come in
discussions,
soon.
don't we?
Again,
we have some good psychology discussions, don't we?
Yeah. Well, it's 90% of trading, in my opinion.
Yeah.
Certainly 80.
Yeah.
You know, what is a strategy? Every strategy works. I truly believe that. Find me a strategy that doesn't work. I'm yet to see it. With the correct risk management, the correct psychology, the correct implementation when it comes to consistency and discipline, I truly believe that every thought out strategy, and when I say thought out strategy,
like a puzzle.
A genuine strategy. Like not just something someone's gone, 10 lots on gold. I don't mean that. I mean a real thought out strategy.
Right, you were buying 10 lots on gold since January. I'm just saying.
Yeah. You know, so like give yourself a proper strategy. Any strategy works. The reason traders fail, it's all in their head. And I'm yet to meet a trader who has failed because of a strategy, not because of psychology. They've all failed because of psychology. I don't care what anyone says. I will stand on the Burj Khalifa with the biggest sign and the biggest megaphone saying all traders fail due to psychology.
Yeah, you would be considered a madman and stoned.
I'm always considered a madman, and I'm joking. I'm not.
I have a similar belief where you can just stick your entry anywhere on the charts, and as long as you have like a positive risk to reward, you probably will end up slightly above break even on the largest side. You know, you'll
as long as you've got good risk
a
management,
little bit profitable.
Yeah, as long as you've got good risk management and good psychology and super discipline and an extreme consistency, you could probably like flip a coin and become profitable.
Yeah, just random direction with positive risks to reward. I reckon you could probably make money most of the time.
Yeah, which goes to show what?
About ratios.
Yeah, but it goes to show what? What is this telling you about trading and about failure rates and about traders as you know, people, not automations? What is it telling you? It's telling you that the reason why traders are failing is risk management and psychology, and risk management comes under psychology. Well, to a point, to a degree.
Yeah, I mean, you can have a 10% success rate with a 9.1 to 1 RR, and you'd be profitable.
Yeah.
Yeah.
So,
literally.
I mean,
yeah.
it's finding that balance between what it is that you like. Like, for argument's sake, Griff, in your case, you are absolutely married not to be divorced from your 1 hour time frame for the longest time. That's where you are comfortable, and you have your trading style that works for you. However, now that it's changed ever so slightly, now you're starting to look for other things. So it's not, you're still married, but maybe your marriage has become a little bit more open. I don't know. Maybe you're going to the psychologist as a couples therapy. I don't know how can I put this, but like the idea of
Does
comfort.
Alex know about this?
Yeah. No,
Okay.
she doesn't.
Oh, no. Oh, then I mean, yeah.
It's
Guys,
just the
don't tell
idea.
me.
Yeah, it's just the idea that even if you have a very specific way of trading, it doesn't mean that you have to completely throw out what it is that you know in order to become profitable. It is small adjustments, tiny little things that you can do that will eventually lead to big changes.
Yeah, all traders must be open-minded. You got to be so open-minded, your brain's going to fall out.
Yeah.
Mine fell out a long time ago, so I'm fine. Yeah.
I brought up this this chart because it kind of went along with what we were saying, where your entry doesn't really matter that much as long as you've just got positive risk reward. And here's a chart which shows like the minimum win rate you need for your risk reward, or vice versa, to be profitable. So if you've got a 30% win rate, you need to be making at least 1 to 3 on average per trade to be profitable, which you can see here. And if you've got an 80% win rate, the smallest risk reward you need is a 3 to 1. So like, 0.33% profit average winning trade, because your win rate is so high. So yeah, this is a good chart to reference when you're kind of figuring out what targets to use. Also, when you're kind of figuring out what kind of win rate strategy you'd like. I think the optimal win rate probably is like in the middle, the 40, 50, 60% range, and then ideally the biggest risk reward possible down here. Maybe I can draw.
The only thing that's going to invalidate the chart that you got up right now is consistency. So if you're inconsistent, then that chart isn't going to work for you. Yeah,
of course. It's about the trader.
Yeah, 100%.
Ultimately.
Which stems to what?
Psychology. Yeah.
Exactly. Guys, like, it's boring how obvious this is,
Yeah, but I mean, we need to reiterate it every single day. Like, it has to be mentioned every single day, because every single day is a struggle.
Yeah, 100%, man.
Every
100%.
single day it's a fight against your own personal thoughts.
The animal
it's
brain.
literally part of what I'm talking about. It's 1 out of 2 on what I'm talking about in London on Saturday. Actually, no, technically, it's probably 3/4 of what I'm talking about, if not 100% of what I'm talking about on Saturday. So like I'm talking about staying disciplined and staying consistent and managing risk in trading. But like the first speech that I'm making at 11 a.m. in London is actually about the secrets to psychology in trading. It's an interview with me. So like it goes to show how important it is. And I think people are starting to wake up to how important psychology is in trading. I think it's taken a while, but I think it's starting to trend a little bit more that psychology in trading is more important. Either that, or maybe I'm just surrounding myself with better people now.
What's the day that you're speaking, Will, at the expo?
Saturday.
Oh,
you were in London. Yeah, you were in London, didn't you?
Yeah.
Hey, Griff, you better pop in. I'm going to be a bit disappointed if you don't.
I was thinking about whether I could make it.
I don't understand.
You can read it. It's the deadline for complaints is yesterday. I'm trying to show that you two should go have coffee.
Yeah.
Actually meet up and have coffee.
Yeah, dude, that'd be sick.
Yeah, we could definitely do that, Will. I'll message you.
Yeah, the missus can third wheel us. I'll send you shopping or something. I'll be like, just go shopping. Go. Actually, no, not in London. It's going to cost me a fortune.
We've done the France shopping thing. Now you want to do the London shopping as well, dude.
Yeah, I'll see. Maybe we could actually do that, Will, because
Yeah, dude, that sounds sick. I'd be super keen for that.
yeah, I'll see. I'll check the calendar because I got a newborn. But yeah, I thought Richard was saying, Griff, drink some coffee and you can like go outside because I'm not a coffee drinker and I'm barely surviving.
Yeah, oh mate, this is second coffee of the day. It's already gone. Like I'm a big coffee guy. You know, I love my coffee. I'd love to create my own coffee. I think that would just be super cool. Like I want to make a coffee and it's got like all the vitamins and minerals that you need. So like, I'd love to make my own coffee. I think that'd be super cool. But for now, I'll just drink it.
Yeah.
Yeah. I'm seeing there was a question up here from Rahul. Where is it? There we go. Rahul, Will, you say psychology is 90% of trading, yet you believe that in demo. You believe in demo accounts. How is one going to understand the challenge of psychology without losing money? Dude, this is super, super cool. I do believe in demo account trading, but demo account trading also takes into consideration psychology. You know, you still need the discipline in psychology. You still need strategy. Strategy comes under psychology. You know, you need to be able to understand your strategy. Psychology is such a broad spectrum. It even heads into demo accounts. Now, demo accounts isn't necessarily, you know, you don't need to trade on demo account. At some point, you need to take the stabilizers off. You know, at some point you need to go into a live account. And then, yes, you're going to open up a whole new realm of psychology. But first, you need to understand the psychology of losing. Like, you're still going to understand you've placed a trade and you're wrong. You're going to hit a stop loss on a demo account. And especially for new beginner traders, you are going to be told you're wrong. Like, Rahul, if I say to you now, Will, you say psychology is 90% of trading, blah, 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 blah. Rahul, you're wrong. You're not going to like it. You're like, what do you mean I'm wrong? I've just told you you're wrong about something you don't care about. But you're not going to like it because we don't like being told we're wrong. You know, everyone likes to be right. You know, ask anyone in any form of argument that there's a whole reason why it's an argument because they think they're right, whereas the other person thinks they're right. In trading, it's the exact same. I've just bought gold. I've hit stop loss means I'm wrong about that trade. I don't like being wrong. However, I've not lost money, but I've still been told I'm wrong. Now, I've got a psychological expectation in that trade, and it's for price to go up because I bought. Now, when I've been told that I'm wrong, that's going to make me feel a certain way. Now, what do you want? Do you want to lose money and get told you're wrong? Or do you just want to get told you're wrong first? Psychologically deal with that, understand why you're wrong, how to better yourself, and then start becoming right. Or do you want me to steal money out of your account and tell you you're wrong? It's like adding sugar on. It's like adding salt in the wound, you know? So demo account trading still holds psychology. So I hope that helps. I do believe in demo trading at the right situation, in the right circumstances. I don't believe in staying on demo account. You know, you have got to take the stabilizers off at some point, especially if you want to become profitable and genuinely earn money. So, but however, it's a great way to start, like for beginner traders to understand their open exposure to initializing being wrong in the markets.
Look, the idea of psychology is that there's multiple parts to it. And every day is something new for you to learn. And looking at completely disregarding a demo account saying it's useless, it's pointless, I think is fallacious. A demo account has its role to play. And there is things that you can learn from trading on a demo account, but it's not to say you're going to learn everything from that demo account. I agree that obviously you're not going to learn how to lose money or getting comfortable with the idea of losing money on a demo account because there's no real physical dollar value that you're actually losing. It's all simulated. So you might become disassociated with the idea of losing money in that way until you actually start losing money and it comes out of your pocket, and then you realize, oh, this is way more crap than I'm willing to live with. The thing about demo trading is that it is a tool, and it's a tool that I believe that you should have in your arsenal. is something that you should use, and there's a place for it. You're not going to learn everything from it, obviously. So 100% agree with Will. It's got a part to play, and your psychology is not like here's one answer for all encompassing all of the issues of psychology. If you only use this one tool, you would have all of your psychology or psychological issues sorted out. That's never going to happen.
No.
I
So-
think because there is no psychology involved in demo trading, it kind of highlights what perfect trading should look like. It's like not everything has to show you what your problems are. Something can show you what your problems aren't, and then the
Yeah.
inverse of that is your, and you know, as a side effect, the inverse of that is then your problems.
Yeah.
If that makes sense. So it's kind of,
Yep.
you don't just have to look at like the light, you can look at the dark side as well, like the inverse, to see, you know, I hope that makes sense the way I've explained that.
Yeah, 100%.
Yeah, no, that makes 100% sense to me. Because sometimes we're so focused on what it is that we're doing wrong that we sometimes forget what it is that we're doing right. And inversely, what you're doing can show you where your gaps are, even though you're not looking for those gaps, even if your intention is not to find those gaps, as an example.
Yeah. Yeah, no, absolutely, mate. Just looking now, we've got news out in an hour and 45, hour and
We're going to be a while.
55. Yeah, no, we got a bit yet. I was just seeing someone was like, "Oh, PMI is coming out." I was like, "No, it's not."
That'll be exciting. It's always fun watching the news candle live.
Yeah, true. No, it is. Unless you're in it, then it's not.
I see there's a lot of people asking about the giveaway. The giveaway, guys, is only tomorrow. So there's no giveaway today, but the entries for the giveaway is today. So you can go and you can click on the link. You can go and do your entries there. Make sure that you follow the Fivers, Jonatan, and the live stream on Instagram. And then the giveaway will be done tomorrow, which is Wednesday. So for those who are asking about the giveaway, there isn't any today. It's only tomorrow.
Yes, indeed, mate.
How's the trading tournament going? I've not been following along. Have there been any more matches since last week?
I don't know. Me and AJ, me and LJ are going head to head tomorrow.
Oh, exciting.
So the results were LJ beat Ellis, obviously, and then Will beat Griff.
Yeah.
Rich beat Victor. Jonatan beat Dirk. Samir beat me. Derry beat James, and then Carla beat Jordan. And Anastasia and Pedro are only going to trade tomorrow at 10:45 UK time, because the day that they were supposed to trade on was the fund rate day, so they didn't want to trade there. So tomorrow we have the Wednesday. First of all, it's going to be Anastasia and Pedro in the morning, tomorrow morning, and then
I'm
have
keen to see that.
yeah, and then LJ and Will are going to be the afternoon section tomorrow. So Will and LJ, and then Rich and Jonatan will be on Thursday. But before the two of them on Thursday, it will be Derry and Carla, and then we have yet to see when Samir and whomever is the winner between Anastasia and Pedro are going to take place. So 2 matches tomorrow, and then 2 matches on Thursday with a potential third match.
Yeah,
But-
dude, there's 2 matches I'm for, and it's Pedro and Anastasia, and Rich and Jonatan. I'm super excited for those 2, man. I'm super keen for that.
Griff, who have you got your money on? If you just looked at, let's talk about the hypothetical between Anastasia and Pedro, and then the matches that are already synced to happen.
I'm going to lose my job now. Jonathan's come in. I can't give the wrong answer.
Yeah,
Yeah,
My
think
money's on Jonathan, of course.
through that question.
see, even the boss is in now, and he really, really wants to know what Griff is thinking.
Yeah.
yeah.
Well, I think, gosh, I don't know. You know, last time I gave my answer, I didn't kind of vote for who I thought was the best trader. I thought I voted for who I wanted to win, and I think I want Will to win, because if Will wins, that makes me potentially only second best because I lost to him.
Right, yeah.
You know, and I don't mind being
Okay.
second, you know, but if Will loses to LJ, that means that best case scenario I'm third best. You know what I mean? So I think if I had to, I'm gonna be backing Will probably.
I've got news for you, Griff. You were 8th best and up. You know, you were 8th to 16th, the same as me.
It's logic driven, man. It's logic driven.
Yeah, it's just like we fell out first. Oh, I don't know. Shame on our family name.
God. You've
Well,
dishonored
I think
family.
the I'm gonna say it's either gonna be. So we got 3 people. It's gonna be LJ, Will, or Rich. I think they're like in a league of their own when it comes to comparing them to like everyone else. Honestly, I feel like, especially. I mean, there is good, but he's not like
Dark
Rich
horse,
is
mate.
good. You know what I mean? Like Rich is properly good. So it was actually a mistake of mine to pair Rich with Victor because they're probably 2 of the best traders that I've ever worked with. So if we would have Rich and Victor, they would probably meet in the semis if we would separate them.
Yeah, fair.
But then
And
you
the
know,
thing
like
is-
Victor didn't make any money. Like Victor actually ended unprofitable, and I think that's just goes to show that it's a little bit of luck as well. You know, you have to get the entry, and then you have to have that momentum. But Rich. So what Rich did was like he won by also like because Victor said, "Oh, I made a mistake," so he's like, "Okay, I'm just gonna lose a couple of trades here and get back the money, so we're even." And then he won anyway. You know.
Yeah, let me just sabotage myself quickly and then
Yeah.
still win. Like,
So I mean, if you do that and you win, yeah, you're probably gonna win everything. And you know, you guys seen me scalp. You know, I'm on my second, maybe third account here this month. So I don't really have the odds in my favor. If we were swing trading, sure, I'd be opening one position. I'm really like, yeah, see you next week. You know.
That makes for great
Dude,
entertainment.
if I could swing trade over the
Yeah.
course of a year, then I think I'd do pretty well. Like my swing trades at the moment are taking months, like not weeks, but like I'd place a trade and I'd be like, okay, guys, I'll see you at some point in like 4, 5, maybe 6 months.
They're not swing
money
trades, they're
yeah.
swing trades.
Yeah, they're long swing trades, they're like bungee like trades, you know.
if we were going to do this over a
Trades.
few months, Griff all the way. I was going to say 100% Griff as the winner.
Yeah, I'm
Thank you.
thinking we
Yeah,
can probably do. Yeah, we can probably do that. You know, do more of a long-term challenge. You know, do 1 week per matchup, something like that. Because then that would give both swing traders and day traders a good competition. You know.
I'd like that.
Yeah, that would be fun. Man, I'm looking at the market here. I'm like, what's happening? You know, but I'm gonna be honest with you guys. For the last 45 minutes, I've been looking at prices from August in replay mode.
For the
I
pod.
made that change. I do
like-
that all the time now as well.
Man, I know.
Oh.
I did that a couple of weeks ago. I was like, "Oh, guys, there's a nice buy coming up." Oh
Yeah.
wait, that was weeks ago.
And then you were just in
Looking
replay
at
mode.
gold, I'm like, this is weird. It's been ranging for like a couple of months here. What's going on?
Yeah. I don't know,
Yeah,
man. The market's being a
I
bit.
haven't accidentally entered a trade based on the information on TradeView, where it's just like I'm in the replay mode, and then I go and look at my terminal. I'm like, they're not the same. What's going on here? Am I on GU? Is this EU? What's going on? And it's like, oh no, I accidentally clicked the button up here.
No, dude, I've legitimately done that. I've placed it on my phone. I've placed it on my phone and then skipped and realized I was on like replay mode and thought, oh my god, I need to take out this position quick.
One of the first trade I took on, the first trade I took on C Trader was, it took me a while to realize that I was looking at EU on TradingView and I was trading GU on C Trader. So I had trading view of my main screen and C Trader to the right. I'm like, something looks weird, and I'm like asking the team, like, could you check like the difference between, because I think there's something wrong with our feed on C Trader.
Dude, that's so good. I love
Yeah.
that.
Oh man.
All right, what have you guys been looking at here today?
I tried a little EU sell because it looked as though it wanted to move a little bit lower, and yeah, it just ate me up. But so yeah, I'm just flat in the market. I'm waiting for gold to break out of this channel and show me what it wants to do, and then I'll consider entering again, maybe during New York. But with the fact that we have PMI today, and Fed Chair Powell is speaking today during New York, I'm probably not going to be in.
I have to show you a trade I took. So I believe this was, this was yesterday. So yesterday, end of session, took this trade on EU. Yep.
Oh, nice. Oh, unlucky, man. That was super clean.
Oh, you just got wicked out.
Yeah,
I think
I'm like, yeah, this is definitely gonna break out. Like everyone, yeah, this is gonna break out, and then took out that stop and then straight up to that
what
TP
time was that?
later.
I'm pretty sure your.
That's just after 3.
Or what?
Yeah. Your stop loss was just below my entry.
Wow. Okay. So you actually entered around this area.
Yeah, I was around about. Let me have a look properly. 17,697.
Nice.
Yeah, man, that was super unlucky. It just wicked your stop before hitting TP.
But I'm so tired. I woke up in the middle of the night and couldn't sleep. So I had this idea of like a system, testing a system, a mean reversing system, and I mean I was up hours last night just writing out ideas for a system. And man, like I get these ideas and I become all obsessed. I'm supposed to do a lot of different things today. Very busy day. I've just been looking at. I've just been trying different things like here, mean reversion strategies.
Focus on the wrong thing.
Yeah,
That's what I've been looking at too recently. Mean reversion with volume profiles.
volume. I like that. Yeah. So what I'm looking at is the linear regression line, and then pairing it with Bollinger like ATR bands. But I'm also looking at. I like the idea of using volume profile, like trading back to the point of control, right?
Yeah, exactly. That's how I've kind of been doing it, or even to the other side of the value area. What's a linear regression line? I've not heard of that before.
This one right here is the linear regression channel, right? So I can show you. Let's see. Go to a clean chart. So right here you have basically it creates a this line right here is within this time frame right here. So it has a look back period of 100 bars. So it's going to be from here to current price. So it takes all the data points here and it basically creates a best fit line that goes straight through price action. So it creates a channel based on the standard deviation from this line. But instead of using the boundaries, I'm trying to see if I can use the Keltner channel or ATR bands to get in. So this is the Keltner channel, which is a moving average and based on the standard deviation from the moving average based on ATR. So it volatility. But what I'm looking at as well is adding the linear regression and then adding on top of that ATR bands like this. Let me see if I can do 3 times ATR. And then basically this line will be the profit target line. So if I go long or short, that's going to be the area where I want to take profit because that's where that's the mean price basically. It's not the average price, but it's the area where this is the line that is closest to all the data points within this area.
That's so interesting. It is very similar to point of control, just kind of like in a channel rather than, you know, completely horizontally.
Exactly, because what I'm thinking is mean reversion is not only for range trading, because you have mean reversion in a, because I mean if you have
Pullbacks of a trend.
yeah, exactly. So if you have like this is the range, right? So obviously you would be buying the lows and selling the highs, but a trend is simply as this, right? So you would be buying the lows and then selling the highs, and a trend following system is basically just trading within this channel like this. And if you see that, you know, the overall trend is bullish, you want to try to get in at the lower end of this band, and that's what we call trend following, you know, trading with the trend. But if you're a mean reversion trader, you can basically trade both with the trend and against the trend. So you're going to be shorting the highs and longing the lows in an uptrend or a downtrend.
That's really interesting. Thanks for sharing.
That's super interesting, man. I've not looked at it.
I can see why you're thinking about that all the time. How to improve
literally.
it.
That would be on my mind all the time as well. Even that'd be frying me up.
Well, it's great because part of your job is you can keep telling us about it for the rest of the stream if you like, and then you can think about it live.
Yeah, the problem is I'm supposed to be sleeping at night. I'm not supposed to be having like, I bought this e-ink tablet, right? They call like Box, or it's like BOOX. It's an e-ink, and I use it to. It's basically like an e-ink with Android, so I can browse the internet, so I can read CMT, right? So I'm using it instead of my phone to read
it's like
CMT. Yeah, exactly. It's Kindle, but it has the Play Store.
But the Android version.
Yeah. The problem is, I accidentally installed Claude because I can't get ChatGPT for some reason. So I installed Claude, which means now I'm just sitting all night having conversation with Claude about these different technical ideas and everything, and I'm supposed to be studying for CMT, and I'm working on this instead. Yeah,
I know that exact feeling.
Yeah, and they're like, the frustrating part is like you're pouring in all of these hours, and then it's like,
was it worth it?
Where's the entry trigger? Like, how do I actually trade this? You know what I mean? Like, it makes sense. Like, I can see the best fit line. I can see the trend. But like, okay, here's a good entry. This is a good trade. But now can I replicate this 100 times with profitability? It's so frustrating.
Because you can spend so much time thinking about it and getting obsessed about it. And then it might just not work as you plan. And then you kind of have to go back to the drawing board and do it all again.
Yeah, that's frustrating. I mean, I've spent many years working on systems that I felt like it was so close to gaining like real good profitability, and then eventually just had to quit working on them because it didn't really, it's not robust enough, right? But I think here, I honestly think that mean reversion is the thing, you know. Looking at the forex market,
I'm so into mean reversion right now, so it's interesting to hear that you're looking at that too.
Yeah, no, it's very, very cool. I think the more experience you become, the more experience you get with technical analysis and trading, the more you start understanding the concept of mean reversion. Because we're all like, in the beginning, trend following is all we know, because it's all about following the trend. Everyone says like, follow the trend is your friend. And it's like, yeah, sure, the trend is your friend. But what if you're in the forex market and you're trading a pair that is just fluctuating, or you know, like an oscillator, and at that point you'll see a lot of opportunities. And I mean, the linear regression chart on the 5 minute or even the 1 minute on you know, with the if you can set the starting point at the right time, man, it's a really powerful concept that I haven't really understood the power of it yet.
And that's what's keeping you awake at night. It's the fact that you don't know.
Literally.
Yeah. And that also, like, reading CMT, when they go into depth on these indicators used to determine like the mean price and mean reversion strategies, I start to understand that, well, this is really powerful stuff. And really the only things that you should really consider with trend following, in my opinion, would be assets like Bitcoin, gold, stocks, and things like that. That basically increases in value in a whole different way than the forex market. Because like when you have two pairs trade against each other, it's not really going to fluctuate and start. It's not going to trend in the same way as stocks and assets based on different cycles. But yeah, very interesting.
Thanks for sharing.
Awesome. Anyway, guys, I'm gonna have to shoot. I've just realized the time, and I gotta go make a quick phone call. So, guys, I'm gonna have to love you and leave you. And thank you very much for joining myself and Rich on another wacky Tuesday session with us two lunatics. Hopefully you've enjoyed, and guys, I shall see you all tomorrow.
All right. Thank you,
Will.
Will.
Soon.
See you later, guys. Take care. Bye bye now.
I'll be shooting off as well. I think I got involved. I got a bit excited about them when you said the words mean reversion, Jonatan.
Look at this! Look at this little 1 minute. I mean, there's so much potential here. Like if you're just know that most of prices has been here. So if it deviates from that price, the chances of it going back
what have you
is
done?
very high.
I'm going to be looking at that and volume profiles now. That's that's 2 times less sleep.
Yeah.
Right, I'll shoot
Jonatan,
off.
you're a monster. Look at what you've done.
Yeah, exactly.
See you all soon.
All right,
thank you.
thank
Had a
you.
good time. Bye bye.
Cheers, Griff. All right, same with me. I'm also going to hit the road, Jack. Guys, see you guys tomorrow. Have a lovely day. Good luck with your sleeping pattern, Jonatan. Samir,
Thank
I
you.
saw you. I didn't greet you. How are you, Samir? Talk to you tomorrow.
I'm good. What about you?
As you see, I'm always good.
Nice.
All right, guys. Cheers. Have a good one.
All right, man.
Everything,
Take care. Okay.
What's up, Samir? How you doing?
Yo, what is up? I'm good. What about you?
Yeah. All good, all good. We got a comment here from Sam, and the Pearsons are on the linear regression channel. It will tell you if you are in range bound or trend bound conditions. Actually, I'm actually reading. So this is like I read this in CMT1, but then I did the test and I started reading for CMT2, and it's like now I actually have to go back to CMT1 to reread some of the concepts in there. But I need to go into detail on Pearson's R and really understand what that is. I'm not going to pretend that I know. But yeah, man, powerful stuff. All right, what are Samir? Have you been trading any?
Yeah, I'm in Euro USD longs actually. And
What are you in?
Euro USD longs. You can see 1 hour chart. Just a little bit of kind of a long-term trade. It's not a scalp trade. And you guys was talking about strategies. Recently, I've been thinking about being a little bit dynamic. You know, whatever your past experiences, whatever the things that you have learned, you have made mistakes, you know, just thinking about that and being a little bit dynamic. That's what I was, thinking about these days, actually.
Mike has sent me a script.
Script.
It's a trading script. It's called Anchor Linear Regression with ATR Bands. So I'm going to put that into Pine Editor, and we're going to test that out. Okay, indicator. Add to chart. Let's see. Let's hope it doesn't give me any. Okay, it does give me some runtime error. Invalid number of bars back specified in history. Is it because we have the replay? No, we're not on replay. Okay, so the error is error on bar 10,001. Invalid number of bars back specified in history referencing operator. Except the value is between 0 and 10,000. Okay, so I gotta go into settings and I have to add the valid anchor input. Okay, okay, so that's anchor time. Nice. Oh, damn, that's amazing. Okay, so let's try this out then. Okay, so let's try this out on Euro USD. Now, the way I'm trying to figure this out is I want to be able to anchor. Actually, you know what? I'm going to go to a clean chart. And I should have a layout that is called clean. Yep, there we go. And I can then go to, let's say, USD. I can remove that one. So what I want to do is I want to determine a clear market structure where I can anchor it from. So we can see here that this is a downtrend. We have an uptrend and a downtrend where all the trends are beginning here and then here and here, and then we have a new trend starting here. We have this one is a bit difficult though, but I think right now what we're seeing is some type of range. I mean, some type of trend coming like this. I heard the sound. That was weird. Did you hear that?
Yeah, it was from my hand. I'm sorry.
Okay, sorry.
Yeah.
Yeah, no worries. So now I'm trying to determine, we can safely say that on the 4 hour, it looks like your USD is in a... Remove them? No, why are they not removed from the screen? That's weird. Okay, that's better. So we can safely say that your USD looks to be in a trend. But where is the trend beginning from? Why do they keep popping up on screen? Now I can't remove them. That's a bit weird.
They came back again.
Yeah. Okay, so we're just gonna anchor to, let's say, let's just say the 20th of August. This is the indicator. Doesn't make a lot of sense, does it? Whoa. Okay, the 20th of August. Okay. Nice. All right. Looks like Mike has actually created something here that works. I said actually, like, I'm surprised. I'm not surprised at all. This is really, really cool. And then also you have up here a little window. It says bar used 100. So this is why you have a group of people in the trading space. Because I sent a message into that group saying, like, this is what I'm working on, blah, blah, blah. And he's like, here. Sent me a text message and said, here, check this out. So, okay. Now, let's go into settings. It looks like, that actually looks like the proper line. Looks like it's calculated in the correct way. Visually, it looks good. So ATR length is 14. ATR multiply is 3. I'm going to change that to 2. So basically here, the idea here would be to... Mike, if you're watching this, could you try to perhaps put in long signals as soon as the lower bands are hit, and then short signals as soon as the upper band is hit, and then TP at the middle line, or just put in like short and long if possible, because I'm thinking if we could obviously it's not possible to, I believe, create a strategy out of this, because I'm actually selecting the anchor point. And if we're going to quantify this and we're going to create a maybe automatic trading system based on this, you can't really anchor it. It has to look at all history. However, there might be a way to automatically anchor it at a certain level based on a breakup structure. That's a little bit advanced though, but if it's possible, that would be, I think it could be really, really cool to see. But what I want to do is like first see where is the trend sort of starting, which I believe could be around this area. And the idea would then be to, exactly, Mike, as in signals, it doesn't have to be a strategy. It can be the indicator, because then what I'm able to do is, if I'm, for example, looking at the daily, what I can do is I can add it from all the way here. Let's say the bullish trend started here, so I'm going to add it from the 20. Oh, we got ADJPY as well. Gonna look at that shortly. Yeah, I see that you sent a message there in the channel. I think that's exactly what I would want it to look like. So if we anchor this to the beginning of March this year on the daily.
Oh, it's my screen now.
Okay.
Yeah.
Right. If I anchor it here, this would be, yeah, that doesn't make a lot of sense.
Yeah, it's really very wacky.
I think I have to adjust the ATR multiplier based on the trend. Now this makes more sense, of course, but you can definitely see how price is respecting this line quite nicely. So there's definitely something to it. Now, the idea with having signals would be if I set an anchor point here on the daily, then I can go in and simply just click here, can add an alert. So add alert on ALR ATR, and then it would say, oh, so it actually has buy signals. Nice. Okay. So then what you would be able to do is you would put a buy signal, and then you would select only once per bar close. So yeah, you only once per bar close, and then this will be an open-ended alert, which means it's not gonna, there's no expiration on it, which means every single time there's a buy signal, I will get an alert on the candle close, and then every time I get a sell signal, I'm getting an alert on the bar close. So this is definitely something. This is a very good point. Maybe can be able to use pivot points as anchor points. Mike, are you watching? Let me know in the comments if you're watching. Is it maybe what type of pivot points would you recommend for this? Would that be GAN or DMARC? Let's see.
Try to add the normal one, the standard.
So which one would just pivot point?
The standard, yeah. You have to do some settings in it. I used to use this thing.
Yeah, I've seen you have this on your chart.
I think you don't need these many S1, R1. You can use just P. Untick all of it.
Okay.
Let's see how it performs.
Okay, I think I want to go and I want to first try just GAN pivot.
Yeah.
Again, I think GAN pivots work. I don't know which one it is. Yeah, that's not the one. Maybe it's the sequential, the mark sequential. Yeah. Okay. Number indicator. Okay. This is actually an indicator I've created myself, apparently. Yep, makes no sense. Oh, it's LJ used it, as Mike says. Okay. Now Sam says best anchor points are swing high, swing higher, swing low to swing low. I get it. Now what I look at as a swing point, as a proper swing point, is you have one candle here, one candle here, and then one candle here. And this is a low. And then you can decide how many candles to each each side. So if you have 1, 2, 3 lower candle and then 1, 2, 3 higher candle, I view that as a pivot point or a swing point. I believe that is one of the best ways to determine a swing point. So, oh, it's fractal. Anyway, so this is a swing point because it has 2 higher bars before it and after it. So that is a swing point. Now, how do we determine that swing point? Is it fractals? I think it's, yeah, Williams fractal. That's what I'm looking at. Yeah, look at that. That's a swing point right there. Now we just have to adjust the sensitivity. RC says, sorry folks, but at some point our trading community needs to agree that we don't need more tools, rather need better trading practices and idea sharing. I think this is what we're doing. We're sharing ideas, right? Creating structures and good trading practices. Jonatan says, use this one. You will love this for sure. Pivot point high low by Lux Algo and use value. I think this one is good though. I just want to make sure that we can be making sure we can mark out the best swing points, which we can do just by looking at. Okay, so here I think we now have the best swing points, I believe. As you can see, they're basically being marked out perfectly. So looking at the Williams fractal and using a period of 15, we get almost perfectly the highs and the lows. Now, I'm not sure if this is the best. I'm not sure if this is the best way to determine like an anchor point. However, looking at Williams fractal like this, it's actually very good in determining a break of structure, because if you, for example, create a low, like you see right here, this is a higher low. And then if you create another swing point that is lower than that one, you've officially broken the trend. You can clearly see this right here, where you can basically, if you draw, like look at this is perfect. So basically if you draw lines between all the green ones, you can see that as long as there's no new green above the previous one, you have a downtrend. And the same thing goes for the red. As long as you don't have a red swing point above the previous one, you're on a downtrend. Now what happens if we connect, now we see that we have a new swing point above this one. And if you connect those, you see that you have clearly now formed an uptrend. And then you create a new low and a new lower high. So these swing points is actually very, very powerful when you're swing trading. The question is how do you determine, how can this be used in mean reversion trading? And I think actually, let me see how, if I put that one right here, when is that swing point going to form?
Maybe you can add some price action, like some kind of retest of the recent area. I don't know. If you just wanna do strictly on the indicators, then I have zero idea, to be honest.
Yeah, I think definitely think I'm going to be looking at. Definitely think I'm going to be looking at price action for confirmation when we're going along. But this is, let's see. Okay, Michael sent me an updated script. By the way, guys, don't forget we're doing the giveaway today. Yeah, I do get a weird sound in the background. Yeah, Hans, must be you.
And are you getting it? I'll just mute it.
No, I'm not getting it. Right, okay, so Mike sent me a new file. Okay, let's take a look. I'm gonna add it into to the Pine editor. Okay, linear regression with ATR bands. Which one is it? Okay, so we go into this one, code. This is supposed to be that one. Right. Where's the signal, Mike? Where's the signals? I'm not getting any signals. I'm gonna go back to the 4 hour. Right, let's put it at May. I don't know. May? Yeah, whatever. Let's put it at May. 12th of May, 2025. Guys, if you think this is boring, now welcome to trading. I mean, this is when you're trying to develop new ideas and develop, you know, trading ideas and trading strategies. This is what you have to do. Okay, so we're gonna go just to May of this year. Let's take the 10th of May. Okay, Mike, where's the signals? Okay, I don't see any signals. You have once again failed me, sir. Oh, show trading signals. It actually has. Okay, so that's actually a buy signal. Well, Mike, you suck. That is a bad signal. Why is that a signal? Okay, so let's look at the code. Okay, so what I'm going to do is I'm going to copy this code. I'm going to put it into ChatGPT, and I will ask it, what is the buy and sell signals based on? And then it's going to tell me why I'm getting a buy signal, why I'm getting a sell signal, why I'm asking ChatGPT and not Mike, because Mike is slow. And I can easily just... Okay, so ChatGPT says, price entering the trigger zone near the ATR bands with some buffer. Okay. So a buy signal is enters below from above, yeah? Obviously. So it's that simple. But why? Then I'm thinking, why is that a buy signal, and why is that not a? Why is that a buy signal and that's not a buy signal? Is what I'm thinking. Now let's try to optimize the number of signals. Signal sensitivity is 0.1. Okay, how close to the band to trigger signals? Percentage of ATR. Can we do 1? Ooh, so now it's a bigger buffer. It's a 1% buffer. That I like that. Okay, that's a 0.5, and then we will lower the ATR multiple to 2. All right. Well, this is interesting. Now I'm thinking. We'll need to create. I'll need to create rules for this. So basically, what I'm thinking is. I want to sell. Another thing you could do, Mike, is actually make the buffer visible. If you make the buffer visible, so basically like create, you know, this is one ATR line, and then you create it so that it's actually like a line that goes like this. So the area becomes wider. So kind of create, it's like the buffer zone is visible, or at least some type of buffer zone, right? Because then what you would be able to do, and I really like the sensitivity as well, because then it means that it doesn't have to hit the exact ATR. It can actually trigger signal just by getting close to the ATR. So what I would be looking at here, let me change the settings here. Bit more sense. That's a terrible color scheme. Anyway. So let's try to create a rule here then. So one type of trigger could be hitting the.
Do I have to do everything for you?
Hello there.
Do I have to do it?
Go,
all?
Mike.
Hey Samir, how you doing?
What's up, man?
I'm good.
Been a
man,
while.
I'm good.
And Mike, what is up?
Yeah, all good, all good. No, I saw your message, so I quickly just put together the indicator. So you've got to, what you've got to do is you've got to change the way in which it's triggered. So initially it was closing above or below the bands. So then it's only now it's triggered by that zone, and so you've got a percentage trigger. If you go to the DAX, or I can show it on my screen if you want, and if you start the anchor point from the DAX, has got a nicer starting point from the 15th of August on the 4 hour, and it looks cleaner. Can you hear me?
I'm on the replay. That's why. Okay. Is this what we're looking at?
Yeah. Now yours is slightly different to mine, but I think that might be because you've changed your settings on the ATR. Because mine.
That's right. I looked at 2 ATR. I think you were looking at 3, right?
Yeah, I've got 3 and 14. And
nice.
signal sensitivity of 0.5%.
I like this. I really do like this. Because what we have here is basically the ATR bands. So for those of you just tuning in, what I'm trying to do here, and I've been up all day, all night, trying to figure out how can I create and test a system around this. So the ATR bands that we're seeing right here, these are 3 times the ATR. So that's the average true range. How much have the market moved in terms of pips or percentage or dollar value, whatever, in the last 14 candles, I believe. And then it takes that number and multiplies it by 3. Mike, you're looking very good today.
Thank you, mate. I'm from my new office, so this is the
That's
first
pretty
time
cool.
I'm streaming from my new office. So
yeah, that's very, very nice, very nice. How does it feel to be not having to work in an office with 10 other people?
Isolated.
Really?
It feels isolated and echoey. I need to get better soundproofing in here. You probably can't hear it because my microphone just blocks it all out. But yeah, it's pretty isolated. So yeah.
Well, I love being isolated. I think I'm just made for isolation. You know, I'm here in my basement.
I feel it's something that I am going to enjoy. I think it is something I'm going to enjoy. So, but I need to go and touch grass every once in a while and go and get some fresh air.
Meditate. You know, meditate. You know what should you? You know what you should do if you have the space? Just take a what is it called when you have a sofa but just for one person?
It's phase long.
Whatever that name is.
Yeah. What about it?
Very comfortable chair.
Just a
you
chair.
take one of those, put it in the corner, and that's your meditation place. You know, you meditate. 20 minutes a day, do some breathing exercises. Become friends with that space, with that office. That's going to be your little getaway.
It's not a bad idea. It's not a bad idea. But yeah, there you go. There's the indicator. I mean, obviously it can be adjusted as you want. But I've actually written that one in Claude rather than ChatGPT.
Yeah, Claude is better than ChatGPT, right?
Depends. It depends. Neither of them are very good at. I haven't found any AI model that's good with PineScript. I haven't found one. Because none of them realize that there's even version 6 out instead of version 5.
Yeah, it's so stupid. I even tell it like it's version 6. It's like, okay, here's version 5, but
yeah. No, they don't. They're limited with Pine. I don't know why. I guess nobody's really tapped into that educational piece of using them as large language models to learn and to build the power into it. But yeah, I mean, you can edit and change it however you want. Depending on what the bands are, you can you could use the Kettler bands or the ATR, build all sorts of different things into it. So
yeah, no, that's awesome. I mean, I really appreciate that. I think I'm going to try to continue building on this. I think what's exciting here is to be able to have the linear, the line, let's just call it line, to have the line, the best fit line, and be able to anchor it. That was the main part. So here for example, you have being able to anchor it to this range and trade this range based on ATR can be I believe very, very helpful. So I think that's going to be really cool to try out.
Yep. So there you go. Anyway, I'll leave you to it.
Thank you, man.
I'll catch you later.
All right. Take care.
Bye.
Right. So RC has a question. Tell me your rationale for the system, and I can help you code it. Now, if you know how to code indicators, trading systems, automatic trading systems, and all of that, if you're good at that, reach out to me. Okay, reach out to me and maybe we can work on something together. I'm not just talking about simple indicators in TradingView, even though that's probably what I want to be doing with this. But if you are able to, code MT5 indicators, maybe C# using CTrader, reach out to me, and I would love to get together with. You can reach out to me at. Jonatan at r.r@thefiverse.com, and I'm happy to find. So I'm looking for a coder that knows technical analysis, that knows trading, to be able to develop tools, develop possible trading strategies, and work with someone that's already in the community and maybe know a little bit about how I trade and can share ideas and improve our own trading. Because right now I'm working with coders where I don't really have a connection with them within the trading space, and so if the indicator that I have, my indicator was created by a former student of mine. So I did private mentoring in the past, and I had a student create that indicator together with me, and I'm looking to build sort of a relationship like that with a coder that can help me out. So if you know how to code, reach out and we can talk about that. Right, so basically what I'm trying to do here is the idea here is that markets range, the forex market range a lot, and even if they're not ranging, there's going to be a mean price within the range. You're also going to find it within the within a trend. So to be able to anchor the linear regression line or the best fit line, if I'm able to anchor that at the where I think a new trend is forming or where I think a range is forming, I'm able to use that as the profit-taking area. Because if we know that when prices starts deviating away from that line, we want to either sell it back down to the mean price or buy it back to the mean price. That's basically how a mean reversion strategy works. Now, what we see with a linear regression channel is that it's basically going to create a high and a low based on standard deviations away from the best fit line. And I think it's using ATRs for entry is much better. So that's what I'm trying to do. Price hits a certain ATR of price, could be 2 times ATR, 3 times ATR. I would then buy that low, sell at the. So here's a perfect example of that, right? Hits the ATR right here. Sell whenever price hits the mean. And the question is then, what is the optimal entry trigger? Is the entry trigger just hitting the ATR line? Because then you could always just look at having a limit buy order and a limit sell order always at the top and the low. So as soon as that ATR is hit, it gets triggered. And then you would have to look at what would be the optimal stop loss. I think one way of doing that would be to look at I think it's the MFE and the MAE, the max favorable exertion and the max adverse exertion. Basically what that means is if you take the ATR and then you can look at what is the max amount of pips that price moves below the low ATR. So if you find that the price very, very rarely moves lower than 10 pips, your stop loss is going to be 10 pips. And same to the upside. So have a limit buy order at the low ATR always, and then have a standard stop loss of 10 or something, and then always exit that position when the middle line is hit. That, I think, could make for a pretty interesting trading system. Now, I'm interested in looking into the option of automating this, but how are you going to be automating this if the anchor point you're selecting is based on visual confirmation. And I think that's going to be the difficult point. Right now, I don't see that being possible unless you can use something like fractals, and then you can see right here. I don't know. I don't know. That's very, very tricky. But I think I'm done going, all in on this. I would love to. You know what, Samir? I'm gonna take a quick break. I'm gonna get some coffee. If you're okay with that,
All
I
right.
can share your screen.
Yeah, definitely.
All right. I'll see you in a little bit.
Sure. All right. So I was looking at this news thing. So we have a couple of news today, like we have 7:15, and and Jonathan really explained about indicator trading. It really opened my mind. I'm not really a indicator trader, but it is really interesting. Anyways, hi guys. Let's see what chat is saying. Okay. Hey bro, how are you? As I'm in Euro USD longs actually on my phase 2. I blew accounts as I mentioned on the last stream. I'm not afraid to admit it. I blew my live accounts, 2 live accounts, and here I am. I'm trying to, pass the challenge again. I'm on phase 2. This trade is on my phase 2, and let's see how it performs. And as for the NAS, as I do like NAS, I'm looking for buys around this area actually. It looks really good. And if we can get a deeper buys somewhere around here, that will be really good. You will get phenomenal risk to reward. And I was discussing about earlier when I just hopped into stream, like being a little bit dynamic in trading, not just, stubborn and just, follow the same thing. Okay. So I was really thinking about it, and I've came to a conclusion. It's just my opinion again, that being a little bit dynamic is really good. Like the things that you have learned overall, your past journey, your overall journey, the things that you have learned, and then you can take action in your particular session. What rules did you break to fail your funded accounts? That's really a good question. Monetary, yeah. So the rules I break, I over risked actually. I was following my strategy to the T. It was just a losing streak which got to me, and I took like 5 losses in a row. And I blew the account. I was risking 2%. Even on this Euro USD buy, I'm risking 2%. If I hit CTP, my phase 2 is gonna be passed. So I am okay with that. So for some traders, it might be a lot. For some trader like me, I'm okay with that. I made a decent withdrawal amount, and I'm okay with that. Now it doesn't really hurt like it used to. That's bonus. So I'm in this Euro USD buys as I mentioned. And NAS 100, I'm looking for a buy around this area. The life of travel. Hi, bro. I know you. You have been here a couple of times, and thank you. Thank you so much. I have seen you. You are a regular viewer, and I appreciate it, bro. Thank you. I read that most traders fail by violating the drawdown rule, daily or max. Yeah, it is the most. I think you fail the challenge. If you violate these rules anyway. So yeah, of course, most trader make this mistake and they lose the challenge. You are right. Samir, if you can share one of your failed trade, like entry, exit, and lot size? Please, it will help making systems better. Really good question again, RC. So my failed trade was, yeah, I remember what I did. So as my strategy is mechanical, right? Like I used to short these liquidity points like this, and for example, this, and for example, this. So NAS 100 was really not in my favor. What do I mean by that? Look at this. I took 2 stop losses that day. Took 2 stop losses that day. I think this was the daily high. Yeah. But instead of that, you can just mark this. Took 2 stop losses that day because price never gave that liquidity move. So was it my fault? I was following my plan, and I will not consider it was my fault. But it would have been my fault if I was very stubborn, if I wouldn't have done anything to just eliminate these things that that is happening with me, which is I'm hitting so many stop losses nowadays. That's why I lost the challenge. So the thing that I did to eliminate that thing is just be a little bit dynamic. What do I mean by that? The things that I have learned over these 6 years, I will utilize every concept, not every concept, the concepts that has given me good results in past. Okay. And what are the concepts that has given me good results in past? That is pullback trading. One thing. I'm not going to be getting too much in detail about the entry criteria, but I'm just saying the pullback trading, I have traded a lot. Like my whole journey has been related to pullback trading and in sidebar breakout pattern. Okay. That has been really good to me. These kind of setups and some kind of supply demand and the order block, and then the structure shift on the 1 minute on the NYSE time frame only on NAS 100. Okay. So these are the 3 things that has given me most amount of results. And of course, following some kind of liquidity also. So I thought, why not to just, see what is best in that particular session and just take action. Let me give you an example. I just took a trade on my phase 1 on NAS 100 that day. It was only 30 minutes actually. I'm just trying to find. Okay. So this session was in sidebar breakout pattern. So I just, took the advantage of my past experience and taking these kind of trades. I just executed the trade and I just booked my 1 to 2s around this area. So these losses, these accounts that I lost, the live accounts, and getting back-to-back losses. I think I took like 6 to 8 losses in a row. Taught me one thing, that being dynamic can be good thing. It's just my personal opinion, of course. I tweak things here and there when I do get some kind of barrier in my trading. Like I lost these live accounts, so I had to add or subtract few things to make my system better. So that's what I found. Okay, it works good for me, and that is my point of view again. And somebody was asking account size. I think I'm comfortable with 100Ks. So yeah, 50Ks has been worst to me I've seen in past. I think I only passed 1 account out of like 10 accounts maybe. So 100Ks and 20Ks, that's like my thing, So I'm comfortable with these accounts. Jonathan is back.
I'm back. Here I am. How you doing? Have you been making any money while I was gone?
I'm just letting my trade run. Let's see what it does. If it hits the TP, the phase 2 that I'm on will be passed. And let's see how it does. If it hits the stop loss, then it is what it is,
Yeah.
I'm just trying to find my what. Okay.
Right. Man, I am I can't really let go of this thing I've
This
been
ADR thing, I'm really confused.
Yeah,
I haven't really, traded any indicator based system. I think back in the days, 2021, my friend recommended me this pivot and EMA strategy. I think that was also good actually, if I followed the plan and all. Yeah, anyways, that was long ago. Mentioned when the strong trend is there is no lower high on the 1 hour, which mechanical trading ask. Yeah, exactly. RC, that's what I noticed. When there is a very strong trend, and then liquidity strategy doesn't work. So then only the dynamic approach is best. What do I mean by that is the systems, the experience that you had, that you have, over trading these markets, you can utilize that thing. So yeah, the setups that you have, taken losses on, you're kind of in the back of your mind, you do know you have some kind of perfect setups in your mind, so you can utilize that thing. So being a little bit dynamic can be a good thing, I think. Being stubborn, just stick on one thing. Like NAS 100 was really trending, and I took back to back like maybe 6 to 8 losses. I think 8 losses in a row. And yeah, that just taught me this thing. Being little dynamic is not bad. So yeah. Yeah,
you said
Yep.
about your probably your NL. Yeah, reach out, man. Happy to have these discussions with you guys. Happy to be able to share some knowledge with you guys. Maybe share a thing or two, and we'll try to figure out if we can work on something together. Let me. We'll have a conversation about that. So you said Samir, that you haven't been trading much with a indicator-based system, more looking at price action. And the indicators here that I'm looking at is yes, they are indicators, but it's all based on price. Basically, the ATR is just, you look at what's the average range of price for a certain time back. So that's just price. It's just a way to visualize a number based on price. And then you have the best fit line, based on price. So indicators like these is basically just showing you price through a different lens. However, there's something that is not available because price action traders, and I'm myself very much a price action trader. I say things like all you need is price. All you need is price. Everything you need is in price. But there's one thing that is not in price. Do you know what that is?
Maybe. I don't really know.
Let me know in the comment section if you guys know what I'm saying. So there's one aspect of technical analysis that is impossible to know through only price. You could call it it's a second layer. That's right, monetary.
Yeah.
Is monetary the same guy as? Are you monetary economics? Do we have two monetary? You got one being monetary and then the other one. That's right. My end monetary. That's volume. Volume is not something that you can see in price. Volume is, especially if you have a centralized exchange, volume is reported as a secondary layer on top of price. That's why I think volume analysis could actually add an edge to your trading. And
many successful traders use this thing nowadays. I see, social media here and there. Yeah,
definitely.
volume is a big thing actually.
It is, and I've done some research on it, and it seems that tick volume is not too far off from the real volume in the forex market. At least not if you're above the. I
was having a friend. He was friend with kind of a hedge fund manager, so he was taking signal from that guy. So they used volume profiles and all these things he mentioned to me back in the days. So yeah, it's a big thing actually.
Definitely. I got Victor in the background as well. I would love to hear Victor's opinion on what I'm trying to figure out here
Victor.
as well.
Hello.
I got tired of the bell, so I thought air horn is best to introduce Victor to the live stream.
Hello, everyone. I'm Victor. and I'm a trader.
Okay.
Amazing intro.
Yes. So what was the what was the question, Jonatan? You're asking about volume being go ahead.
No.
Make
Forget
your
all
case.
about that. Forget about all about that. Okay, so I woke up last night, 2 a.m., and I was thinking, mean reversion. That makes a lot of sense. So first I had a nightmare. I had a nightmare that someone burned down my house. And then I woke up and I thought, okay, mean reversion. I don't know what that means. Maybe in a house burns down, I have to build it again. Like bring it back to the average. And then I thought, mean reversion in trading is amazing, right? And I thought I read about what was I gonna say? Yeah, I read about the linear regression channel tool, and I thought, okay, that's an interesting concept. Having a best fit line through a certain section on the chart to visually show where majority of price action is gravitate towards, right? So I thought, okay, well, if that is the level where price tends to move back towards, I want to take profit. Whatever trade I take, that's where I want to exit the trade. All right.
Okay.
So thinking mean reversion, I'm going to look at deviations from that best fit line or that mean line. Sell or buy the deviations. This is simple mean reversion, right? But then I looked at the linear regression channel tool, and I saw that the borders of the channel might not necessarily be the most effective entry points. So I thought ATR is very effective in mean reversion. So why not add ATR bands and have the linear regression line going through the same area with having the ATR bands on each side? Basically, the simplest idea would be to sell, exit position, buy, and exit position, right?
It makes a lot of sense. I do understand what you're trying to do. First thing I would ask is how often what have you done so far? Have you been looking at any specific asset? Because the number there's a background sound. So yes, the how often does that asset that you tested go through that mean line or best fit, as you call it, line?
Okay, so I haven't tested. I don't have any statistics whatsoever. I'm trying to first build a framework for testing. I'm first. I need to know what to test.
Okay, because the question is, I understand your concept of where it goes back to the mean reversion. Basically, you're using some kind of a band to indicate what is a good extreme to go against the expansion. The question that I want to ask you is, first one, I would want to see how good that each of those two components are. One is the indicator of the expansion, meaning the extremes, and you can then build some data set on it, like how often does it reach that area and have a meaningful reaction. That's one thing, and the other one is obviously the best fit line. How often does it go back within whatever period you decide, whether it's days or within 1 day or the whole month or whatever it is, right? So how often do both of them work as an indicator of what you want? That's one thing. And then you want, but it depends on the. I'm pretty sure that this will depend on the market condition, because as we know, any mean reverting strategy will work best with ranging markets. So you'll have to use an example or a base asset to test this on, because it's not going to have the same performance on all kinds of assets, right? Commodities tend to.
Here's the point. One thing I failed to mention is, you see this indicator begins from here.
Okay.
Right. That's the starting point.
Okay.
That's because it's able to be anchored at a certain date.
Okay, so in that case, you think, but how do you decide that point? Because whenever you do this, that means that all the information that best fit line is collecting on would be from a specific stand or a starting point, which means that you're basically trying to use or calculate the mean for that move. So
Yes,
in
exactly.
so that means that you're basically you can use it on I understand your point now. You can use that in multiple. You just one leg, that leg
Exactly.
being sideways or having a direction does not matter. It always comes back, or at least that's the idea. It is likely to come back to that median line for you to get out of your mean reversion. I understand that. That's very clever, Jonatan.
Yes. So basically, what I'm thinking here is, when there's a market structure shift, when a range turns into a trend, we have a new regression line.
Okay, that makes sense. But you can define that also when you leave one level, right? Because if you're trading supply and demand, once you leave one level, either by breaking it or by reacting to it, we understand that it's likely to move away with direction, right? With intent, with deliberately moving away from a direction instead of going sideways. So that's very similar to what we have in a quasi. I'm gonna say it again, but any structure.
It's amazing how everything just goes back to quasis.
Well, how you can get the a quasi basically is just one way of the market to reverse. It's not the only way. You have V-shaped recovery, you have double tops, and all of that. Those are other ways of not recovery but reversal patterns. And quasi is just one way to do it. One that I like a lot. But that these reversals you get when you have a break of structure, right, on something bigger. As well as something on the same time frame you're seeing the quasi, but they're usually on something bigger, perhaps a supply and demand area. There can be something like an order block. So it makes sense what you're saying, to be using this to start your leg, because you understand once that area is broken, it will have it will start behaving in a uniform way, meaning leaving the area, leaving the section, leaving the structure it just had for some time to come. That makes a lot of sense. How do you is this best fit line, is this something you already have an indicator for, or are you going to build it?
Yeah, I have it right here on screen.
Okay. And how is it what is it using for its inputs?
So Mike created the indicator just now. So I think we have to ask Mike about that. But I think what we have here is a combination of the built-in linear regression line in TradingView and the ATR bands.
All right. I would have to, if I were to, you have to test both of them. Play with the inputs to see if there is something, without doing too much testing, easily. Is there some kind of a reaction extreme where you can get these entries, and how often does it come back? And what are good, for example, to test out that idea you have when you have a break of structure. Is the median line touched quickly enough in that mean reversion, because the risk of any mean reverting strategy while it is moving, while it is trending, is that by the time it reverses to the mean, that mean might be far away from, or too close to where it entered. We understand what I mean? If the
Yeah.
if the move is too aggressive, right, by the time it reacts, it might come back to the mean, and you might not get much of or any profit. So it needs to be something, that midline needs to be something that is touched on a frequent basis, or at least um, it captures the move without it. It cannot be too sensitive to the move. Otherwise, it will be going up too high too quickly, and getting close to your entry. So these are things you need to experiment with. But I like the idea a lot.
So we have your NL and RC in the comments. They've said they have both emailed me and working on something. I would be happy to put you guys together into like a WhatsApp group and see if we can develop something here that would be super fun. So just to confirm that just to confirm that the line is the same as the linear regression channel. This is it over. So this is the indicator that Mike created, and then if I overlap the trading views indicator, it overlaps perfectly with the midline right there.
Okay.
See what I'm saying? Just to confirm that it's the same calculations, right? And then if I look at the and then it just simply just adds adds the ATR. This is a really good suggestion as well. The thing is, now that I can anchor, now the problem with this is the problem that we've solved with anchoring it. Now if I'm on the replay tool here, now look at what happens when the look back period on the linear regression chart is 100 and we move forward. This is what happens with that one. It obviously moves forward with price, and the look back period is still 100. It doesn't have the same anchor point anymore. But this indicator will always have this anchor point. So it will always, and then I can look at, okay, where do I think the trend began? I think it began somewhere around this area. Jor also has a very good suggestion. My suggestion would be to only take longs when the channel is up. That makes a lot of sense as well, because it's still mean reversion. I mean, you can trade with the trend and still be a mean reversion trader.
Yes.
Because a lot of people think that mean reversion is like a contrarian way of trading. It's like people think mean reversion is like, okay, everyone's going long, so I'm going short. But that's something completely different.
Yes, mean reversion means that it exaggerated a move, and it has to come back because of momentum, loss of momentum. It has to come back to some fair or mean. That's where the title, the name comes from, area before it can continue. And that's the little thing, the little move that you want to capture. The overextension, and then coming back to something that makes sense for everyone.
Yeah.
And you were saying something about volume. Does it use any volume indicator? This indicator you're talking about, Jonatan?
No, wait a minute. So I talked with Griff, and Griff said that he's using volume profile. Now, wouldn't it be amazing to have the volume profile is horizontal? I guess it can only be horizontal, but what if you can have like an anchored volume profile that is shifted in a 45 degrees angle, like the line right here?
Okay. And how would you use that? Not sure I follow the
So
use.
the regression line is the best fit line through a certain set of data. But what if you could have a best fit line through volume in the same manner?
Okay.
Because this line basically tells us most, in a simple way, it's not correct, but in a simple way, where's the most data, but not where's the most volume.
I understand, but what you would then have is you would have not a straight line, but maybe adjusted for volume then, meaning you would give more weight to certain periods because more volume was traded at that during that period. But I'm
That
not
sounds
sure
like a
how that would.
VWAP. Isn't that almost like a
Yes.
volume weighted moving average?
Yes, but obviously this would have a different calculation.
Okay, so we have volume weighted average price or volume weighted moving average. Let's use volume weighted average price and moving average. See what the difference would be on these. So that's the volume weighted moving average, and this would be the volume weighted average price. You know, I think this could definitely work. I mean, this is based on tick volume. All right, so we got LJ as well. LJ is coming in. Yeah, talking about VWAP. Do you want VWAP as target or calculation consideration? I think.
Is that LJ in the profile pic? I think.
Yeah, that's Mike's twin brother LJ from Australia. The cool version.
Okay.
Now that's a good point, LJ. Do we want it as profit or do we want it as a? Do we want to have it use it in calculation?
I think as profit, it makes a lot of sense. That's how you trade. That's a common way to be trading, right? Targeting VWAP to get out at that mean volume weighted.
Yeah, but does it make sense in the forex market with tick volume? I mean, it makes a lot of sense in the stock market where institutions wants to buy around the VWAP to have the best trading conditions. Is it the same in the forex market? Is that why are institutions looking at VWAP in the forex market? Because
I don't know for a fact, but it would certainly make sense. Why wouldn't you? If that is where the market participants transacted, you want to. That is what gives it relevance, right? That is for a lot of people where they start going underwater. That's the level. That's their break-even point. So it makes sense to use that as well. Whether they're actually using it, I wouldn't know.
Right. Okay. So the reason why VWAP works, I believe, is because institutions are actively using it in equities. But if they're not actively using it much in the forex market, then it's just retail traders applying the same ideas in the forex market as if it would be the equities market. And I don't know.
I understand. You're talking about the institutional, meaning not the speculators, but the multinational transacting the market. They're not looking to get out easy, quickly again on the market. They have to just transact a certain amount of money because they have a real world case used for it. I understand. For them, it wouldn't make sense.
No, because in the equities market, let's say that you want to buy $10 million worth of a stock, but you know that if you go in just buy all at market, you're gonna pump the price like 50%, and you're going to get a very bad fill, and it's going to spook your whole position, and it might just create a very unfavorable condition for you. So instead of buying, all of that, you divide it up into 1 million buys, and you make sure that every buy is happening around the VWAP. That way, you're going to get filled in a way where you're going to get the best trading conditions, and you're not going to affect price as much by buying around the VWAP, because that's where the most volume is usually traded, and that's why it works great in stock trading. So,
but that's for minimizing slippage to getting in and not getting out. You're using where the most volume is to actually offload or to load up on your position. But what you're doing is you're trying to understand, or at least trying to figure out if the VWAP, for example, would be a good place for you as a place where price would gravitate to, right? And would be, so that's a different kind of application for VWAP. But what you're saying is what you previously just said is, it makes sense in terms of getting out and getting into the market when you have high volume to do that as VWAP because of that, slippage mitigation aspect. But that's separate from whether or not it's going to come back to VWAP. I would think that VWAP is even better than mean EMAs or SMAs, because it actually takes into account the volume, right? That makes it more it have more information, more relevant information. So it is superior to just simple EMAs. It's also taking that volume with it, and for that reason, I think it's not bad at all. Trying it out as a target, regardless of its benefits for offloading positions or getting into the market with the least amount of slippage for institutional traders.
Yeah, I have to look into the calculations of VWAP and really understand what I'm looking at here, because now that we got LJ as well in the background. I like this. This is good stuff.
Oh, I can jump in on this. Yeah.
How are you doing, LJ?
Doing well.
LJ.
How are
you, man?
How you doing, man?
We could.
I'm good.
We could almost hear your curiosity being tickled here.
Yeah, I was working on stuff in the background, and then also had the stream there, and then I was like, okay, I'll jump on my computer and come in. What was my train of thought? So what I was going to say about the VWAP, yeah, like you were saying, Jonatan, whether you want it as a target piece or a calculation consideration, because those are two very different profiles here.
So how would are we talking about calculating like basing ATR on VWAP or the regression line?
Yeah, so that's sort of what I mean, because like it makes somewhat more sense to have, if you wanted to have the algo having a bias to a directional position towards the VWAP, that would make sense, right? Because that is going to be basically the anchor point that sort of gravitates the market. That's what VWAP is. That's where the majority of volume is. That's where most traders are trapped, whether long or short, either side of the market. So once you reach that point, you're going to get some kind of, typically you tap there, trap traders get out. Other traders that were long prior either got out before, hence that's why you came back to VWAP, and then they potentially re-add. And those who are short often, scrap the shorts, go long, and change direction.
So before we move on here, maybe I have to perhaps let go of the idea of the regression line. You're saying that there might be better ways to look for profit taking areas.
I wouldn't let go of it.
Not quite. No. I would definitely hold that because it's very significant. This is why I'm trying to bring some stuff up on my C Trader That's why I jumped out of my computer to try and show you. So if you give me a sec, I'll try bring something up.
Yeah, let me know if you want me to share your screen.
Yeah. Okay, so this has got a bunch of stuff on it, obviously.
I don't see any. What do you mean?
Yeah, nothing on there. Hang on, I'll go to the end. I've got a clean chart over the back.
This is the chart
Right.
you posted on Twitter, and people are gonna go crazy. You know what I mean? Like this is this guy's not profitable. He's just putting a lot of lines on the chart.
Oh my god, yeah. But basically, so see these dots down here. This is like a VWAP indicator I have that you can select whatever point, and then I'll show you the volume from that point. So let's go to what was the start of last week? What the 16th, 15th here, right? So if you just want to go, and we'll just take out the first candle from the open, obviously, because there's the expansion there. Right? And so this is the natural target that we also have for Aussie dollar to run to after making this break through here, right?
Mm-hmm.
And so this gives like the tick weighted VWAP
Mm-hmm.
from whatever point you select. And there's multiple buttons here, so you can do one from there. You can go further back, we can go all the way to like over here. And you can see there's a lower band, from weeks back right now, back to July, right? So this is similar to what you were trying to explain before with the Keltner channels, as far as having like an anchored point Keltner channel. This is a somewhat similar anchored point VWAP, right? And so hence the idea would be, do you want that as a qualifier consideration for the algo to ideally target or have a bias to move towards the VWAP versus trades that are against that general pull? Hopefully
Right. So you're saying that best to look at trades that are. So if price is below the VWAP, you go long up to the VWAP basically.
Mm.
You
Yes.
make sure that you're not going long above the VWAP.
Yeah, so you have a tilt towards it rather than against. So this is now on a 15-minute. If we go up here to prior to the Fed announcement, we're getting right up by there, right?
But how would you use this in combination with what Jonatan was what is trying to do? Would you use this as an extra filter? Would you use this in place of instead of something else?
It needs to be anchored, right?
Yeah, well, hence that was my asked question, because that's what I was asking, because depending how you want to use it, it's going to depend more on what the other parameters that you're building in the algo are going to be.
Okay.
That's going to be the kind of qualifier question to then figure out the best way. But yeah, very effective. Like you can see, through here, that capped us. That's going to be our top target. Right? You can just stack all those all through.
Yeah, I see that. That would be at least for the way that we are looking at it right now, it would be something as an alternative or maybe as a filter to the target, right? Because that's what we think where market is likely to go to. That's where it's going to gravitate to. So that makes sense to make it as a TP, as a target for the position.
Because then it's going to depend as well on time frame, because that VWAP is that's probably going to be more than just today, right? It might be by tomorrow that we actually hit that level, right? So it depends on the time frame you're looking for the trade. Whether you're looking at purely like intraday, London, New York session, today's trades, or a semi-swing type situation, or at least you're willing to allow it to sit and mature for a certain period. It might be a day, 2 days, 3 days, 4 days, right?
Makes sense.
Right. So I have an example
That's
here.
why euro is stuck right here, right? See, we're bang in the center of the VWAP through here, and that's why we're just kind of stuck with the volatility, the volumes coming
It's
through
at
here.
a crossroad, basically.
Yeah.
It doesn't still have to decide whether it wants to change direction or continue.
Yeah.
Right.
And
Okay.
then,
So let me switch.
Yeah.
Can I switch over to my screen just to see if I can integrate it into the overall idea here? Just to see if I can find my screen. Yeah, there we go. So what I have here is the VWAP in TradingView, and you're able to anchor it to monthly, weekly, quarterly, and things like that. So I think let's say if I anchor it to weekly, the VWAP is going to be that white line basically. So we're on the 4 hour right now. So you'll see that anchoring on the weekly and being on the 4 hour, the VWAP is going to be very much going through price. But if I anchor it to the monthly, we'll have more data going back further. So I think the monthly on the 4 hour makes more sense, because now we'll have possible short signals here would go towards the VWAP. Long signals here would go again towards the VWAP. This is a long on VWAP. I don't know if that makes a lot of sense.
You'll have to filter those.
Yeah, it
probably.
does. It does make sense with having longs on VWAP for
That's
that reason.
another-
So the
that's
other point when you go.
Go ahead.
I was just going to say, when you go out longer with the data for the volume, you have to recognize you're getting stale data to a degree, because obviously there's been a lot of macro shifts in between, and then traders will have repositioned or added 2 positions on top of where they were prior at, and whether they've covered or hedged, which comes into the new volume profile, but doesn't necessarily express their current position of the old stale positions, which they actually want to get out of, right? So the more the greater look back period, you technically get worse information, right? Almost the same difference between like a simple and how people prefer like an exponential moving average, because the exponential is obviously more updated.
Okay, so
it depends, hence comes back to the point of what time frame of trades are we looking at.
Yeah, but your question, Jonatan, about taking the long on the VWAP, that wouldn't be a mean reversion, right? If you're taking the VWAP as the indicate as a proxy for the mean, then that wouldn't make sense. So that's a different. It still is a valid entry, but that's a different strategy.
Now let me ask you this then. If so, I'm anchoring the I'm basically, okay, let's just say indicator. It's the ATRs and the line. So I'm anchoring the indicator from here. Would it make sense to anchor VWAP at the same place? Because then we would see within the... I don't think it makes a lot of sense, because then the line would just go through price, because there's too little data.
Yeah, so VWAP, hence when I was talking about before, if you go too far back, it's a distortion of data. Go back to the most relative prior point. So an example would be what we recently had with the Fed meeting, right? Because then you've got a proper changing of hands of positions and new activity on top of the prior pre-positioning. And so if you anchor from that point, you'll get better data quality from that.
Yep, that makes a lot of sense. The problem, so this indicator, so okay, so I'll have to create an indicator for that, because if EVAP, look at EVAP in trading view.
So this is the exact reason why quants and algo makers at funds have a day job. You know, they don't just write the algorithm and then it just goes forever. You got to constantly update and sort of manipulate and manage the algos, even though you've built the core concept, right?
You mean to have a day job as taking care of the algorithms? Is that what you mean?
Yeah, as a quant,
it's not static.
that's why they're
It's
on
not
board.
static.
Yeah, it's not static. Yeah, they have to be constantly cared and adhered to. It's not just like a plug in, go and walk away.
Oh yeah, for
They
sure.
always have
I
to be
mean,
checked and,
I have this idea of trying to get around this by building a portfolio of uncorrelated strategies that, you know, when one is in a period of stagnation, maybe we're talking about like, you know, 300 days of stagnation, then we have another strategy that is outperforming that one. So, but I definitely see what you're saying here. And that's something that I've been realizing more and more, that algo trading is not really about finding or finding a portfolio of algorithms that is going to run 24/7. It's more about knowing which algorithms work in which market structures and market cycles, which is obviously very difficult to wrap your head around, really, to understand when it should be shut off or activated. But I honestly think that a strategy like this could be stupid profitable in manual trading, you know. So and I think here, looking at the 4 hour, I have no trouble spending 10 minutes a day on the 4 hour trading like a highly profitable system if it's a semi-automatic system. And that's what I think is the easiest way of doing with this system, because the problem is the anchoring part and the fact that market structure has to be visually confirmed for me to select an anchor point. Now that is insanely difficult to quantify.
yeah. And you can get so exactly like you're saying. So as far as an individual trying to run this stuff, you will need to sort of check in, right? You don't have to be on the charts the whole time. You basically let it run, get some kind of alert sent to your phone or something to tell you to go and have a look, and then decide, execute yes or no, or you allow it to execute by itself. And then as long as you got that alert, you can very quickly scrap it if it looks terrible. The only way to get stuff to be fully automated with all those other considerations we were talking about is exactly why quants, etc., have jobs every single day that they turn up and they get paid huge sums of money.
Yeah, huge amount of money.
Yeah, because it takes that many hours, that much money, that much input to fully nail down this stuff to actually work reliably every single day. On its own.
I think, yeah. I mean, I think the way I would want to trade a system like this would probably be to like have, let's say you find a range, right, and you put you anchor the indicator to the beginning of the range, and then you're simply just going to be following the idea of trading back to the mean of that range. But then you would have to have perhaps alerts above and below the range on a significant breakout, right? So when that range is actually breaking, you'll have to perhaps, if you see a break in market structure, you would have to stop trading that range and wait for a possible new range to form, or a new perhaps trend to form. And I think that would be the manual aspect of it. I'm, however, thinking about.
By the way, Jonatan, I like the background of your chart. Love it.
Nice.
It has like
It's-
a gradient and
Yes,
stuff.
that exactly. I
Exactly,
like it.
gradient.
It looks like it like 3-dimensional. It's psychedelic. I like it.
Yeah, it's like you're on mushroom, like very.
You're still in
tiny-
Ibiza, aren't you, Victor?
Victor's still at the disco.
No
He hasn't
comments.
come home yet.
Yeah, you had a little bit too much fun there. It's like, oh, I love your shirt, man. This looks great. Colors. Why are the candles moving, man?
Oh my god.
I'm only following price action. I don't know what you're talking about, Jonatan. I have no idea.
I have so many comments. and
Yeah,
so
I'm
many
on the same
ideas.
page actually.
I've never thought about
I have
doing
zero idea what these guys are talking about.
Don't worry, man. Don't worry. Nothing.
that. Yeah, no worries. Yeah.
Nothing that the world needs to know. Nothing that we need
Or
to
maybe they do.
stream.
Yeah.
So what I'm looking at here is it's very easy to determine what a trend is. I mean that is probably the most simplest thing in trading to know.
To code it though. Have you
Yeah,
got
exactly.
a
But-
good
but
way
like-
of coding it? Yeah.
But
There's
what I'm saying
news
is,
coming
like,
out now on I
Better be
think it's
good. Better be good. Oh, it's manufacturing PMI. All right.
yeah,
Good stuff.
manufacturing PMI just came out, and market is moving.
Touch worse.
Yeah, it's not really moving, but we had a little tiny reaction that spread widened just a little bit, indicating the volatility coming in, and market has been raging for the last couple of hours.
Yeah.
And I think it's a long, but not from current levels. So I'm waiting for price to go lower and then perhaps reverse back to
On euro dollar.
on euro dollar. Exactly, on euro dollar. So
Interesting.
I'm currently a short now, a little short, was already before the news for that little move, because I expect, well, just an expectation, but I mean, using order blocks, I can see that it's having difficulty continuing, or it was having difficulties. So, but hey, go ahead, Jonatan. I was just gonna say that.
Go ahead. What did I? Oh,
No,
interrupted
you were.
me.
No, I interrupted you. Yes, I
My
interrupted you
God.
because of the news.
Yeah, I said it better be good, and then nothing.
I think euro dollar is going to 116.90 next. I think we need a
116.90.
downdraft.
Oh,
Yeah.
really? 116.90.
Yeah.
That's what is that? That's 100 pips lower
Yeah.
than where we are. I'm currently short just to go to that swing point. There's a little H4 order block, which I think is a nice place where price could gravitate to. And we did form a fresh order block on the H4 at current levels, and we are currently retesting that. So I would expect some kind of a reaction from that fresh order block going to the previous order block I just mentioned, which is laying. I think it is. That's
Can I?
not
Can
as
I?
low as you said.
I really want to continue with, because I remember
Yes,
where you
go ahead.
interrupted me now.
Yes,
So
I was just filling in as you were getting to the point again.
right,
Yeah.
you had the order blocks. It's like I need to mention the order blocks, please, guys.
Quasi. I said it.
Just get it out of your system, Victor.
That was literally Victor in Ibiza. He's just there raving. It's like quasi, order blocks, quasi.
Anyway, looking at the market is very easy to identify a range and a trend, right? But that's in hindsight. Obviously we don't know what is the market structure going to be in next week. We have no idea. And that's going to be the issue here, because obviously I'm testing this and I'm like, oh, look at range. Let's anchor it in the beginning of the range. Trend. Let's anchor it in the beginning of the trend. But yeah, but what's next? What is the market structure going to be tomorrow or the next 2 days? So, but it's not really a problem, because you can just go back and say, what's the current structure we are in? right now, and then where is it breaking, when is it not, and not breaking. But I wanted to show you something because LJ, you said something about having an alert system that will alert you and say, here's a possible trade, and then you'll take it or you don't take it. So it's like an automated way of trading. And I actually do have alerts set up. So if I go to my alert log, you'll see all of these that says RL said slingshot, and all of these are alerts that I've been getting on an hourly and 4-hour basis for the last probably like five years. And what I do is when I get them, I can go in for like look at the 4-hour. So here would be a like a long signal on the 4-hour based on this one, and then I go in and that's gonna take a while before it load. But I go in and I say, okay, so this is a good trend following trade. Obviously not. It's a long in a range or maybe even a slightly bearish market. But I think this I want to create something that creates. And look at this your USD signal, for example. Now this obviously takes a while to load, but I'm able to get screenshot instantly. That is not what I want to see. But here, for example, here's a long signal. I'll look at this as a break and read. This could be a good trade, and that's something I'm potentially looking at for this. But the problem with mean reversion is that things can move very quickly.
Yeah, so what I would tell you often, sometimes a good way to do it is to build the same algo that you're trying to build, but build it through like the NASDAQ, some kind of something that goes through an actual exchange, so you can get proper data, see if it actually functions at all, and then you bring that over to a currency aspect, which doesn't have the same exchange data. So you have to use slightly lower quality data. You can use tick volumes, combination of like futures markets, options profiling, and then see how you can match up a best fit. So I think that's probably sort of the way to develop it, and then try bring it over to FX markets, right? Because that's one of the reasons why FX doesn't have the same degree of algos trading, because it is very much a black box system. You can't get that raw data that an algo needs to actually process everything, right?
Yeah, you need proxies for everything. You need derivative to do derivative indicators, because you don't have the actual centralized exchange information. I understand that. Yeah, I think it's a great model, because you're using a controlled environment to test out something. You're validating the system before using it out something that has more variables, meaning forex having less not being centralized. Yeah,
it both doesn't have the centralization. It also has far more variables than, say, a singular stock, right? For a very rudimentary stock or index kind of algo, you can use 3-4 parameters. For the most basic, for like a currency algo, you need like 8-9 other considerations towards macro and all sorts of stuff as well, just to build the most basic. So it's more than double. And when you double that, it doesn't increase the difficulty by double. It's like a much more like an exponent curve where it goes way up, right? So if you can build a similar thing with stocks or like an index, and then get like a risk neutral probability density function, that kind of stuff, as a complementary for you to either look at yourself or incorporate that into the algo, and have some portion of discretion, since you don't have unlimited resources to just go insane. That might be a way to sort of test it, fang it out, get the kinks out with actual data, then bring it over to FX and bring in the hybrid, lower quality, but what should fit in to make it a best fit type solution to FX markets.
Yeah, it makes a lot of sense.
Yeah.
Makes a lot of sense.
Well, you've completely lost me. Honestly, I've been spending too many hours on this today. I feel like it's just information.
You're too funny.
That's right. You can
overload.
you can replay it later. There you go. You know,
Yeah, no, I mean,
see,
the problem is like, trying to do this in a way where, because a lot of the tools that are being used in the industry when it comes to algorithmic trading is proprietary, at least the best things, right? Because you're coding it all in C or Python, and they create your own backtesting engines and testing engines and everything, and now we're talking about testing it on the futures market and the options market, and then being able to quantify that information and then bring it into the futures market, and
then you got to run Monte Carlo simulations, everything, etc., etc. Yeah, this is where you get into the full in-depth like quant type world and build full structured products, right? It gets more difficult for sure.
I mean, I'm at the level where I'm able to, if I have a functioning like MetaTrader 5 EA, I can run all sorts of calculations on that. But it's like that is still limited. I'm still looking into the option of like creating a complete backtesting engine on perhaps Python, where you're not limited to MetaTrader 5's backtesting engine and tools connected to that. Instead, you have your own backtesting engine in Python, where you run everything, and then if it works in there, you can run all the Monte Carlo simulations and all of that, and then you can just transform it into CTrader or MetaTrader or whatever you want, or TradingView. But you have to have a foundation for that, a program that actually does all that for you.
That's not a small feat. If you're talking about the backtesting engine, you gotta, for example, validate the backtest it does, for example. So that takes before you can actually use it, it needs to make sure that it's actually measuring things correctly. That's I think that's a big project. For sure, for just a small group or one individual or a handful of
a handsome individual might do it.
Depending on your looks, you might be able to pull it off.
Might pull it off. Yeah. No, it's super
Also,
interesting.
dude, we were getting comments before, Jonatan, when we were on earlier. Everyone was like, LJ and Jonatan look the same today. I was like, I don't know if it's just that, because obviously I have that Nordic background as well, so we got similar like profile. Yeah.
Yeah, I do. Yeah, you definitely look good. You know what I mean? Like, you I would agree. I would agree to that comment. You definitely have a look.
What comment is that?
I thought that because someone
out of nowhere, like there's no comment, He's just
no. This was earlier, like, and then there were a couple of people saying like, "Are these guys brothers?" I was like, you were talking, so I didn't want to interrupt you at the time, like when we were on
I'll just that kind of person. Like, I had a live stream once and had a lot of comments, that people think I look good. You'll see, I don't know where that comment is. I don't know where the live stream is. I can't remember what date it is. Anyway, we're running out of time, and it feels good because I'm exhausted. I've been streaming here for and LJ, you've been streaming for quite a long time as well. But I really think I'm going to continue working on this. I'm going to see if I can test some. Going to be testing some signals on first this indicator. And then I'm going to start seeing if I can do some test it as a strategy, see if it actually makes sense. because it might be the case that it's break even or something, even without, it's not going to be break even, it's going to be super unprofitable most likely without knowing which cycle it's going to perform in. But just looking at this, I'm really liking what I'm seeing, you know, mark out the trend. All of these signals but that one would have been not very profitable, but here we can go into lower time frames, right? So this is on the 4 hour, get a signal on the 4 hour, go into the lower time frames to you know, find an entry.
Final comment, I will say that is the only reason I don't like the Keltner option.
Yeah,
that's where the linear regression is a little bit better, because you can see how the bottom end doesn't meet because you are in that uptrend, right? So what I would say to do, like, you can watch the videos I sent you before, but if you run it from one of the top bands back to the middle point and take a partial profit, once it hits that partial profit, the remaining trades now trigger a trailing stop loss and look to take profit at the lower band. That way you're still net. And then if it gets to the lower band, it then reverses the trade and goes long as well and does basically the same back and forth. And therefore you get trades both sides, as well as taking partial profits in between the whole way up for the existence of the trend. And then you just have to put in some kind of qualifier at the end so it can identify when the trend ends and it cuts the current structure, right?
yeah, that's a good idea.
There you go.
There's a timer, time bomb.
That's actually a great idea. It's my trading view alerts going off. I got
Sounds like Counter-Strike. Like,
what? I'm just give me a second here. I have no, never mind. Okay. Yeah, all right, guys. Tomorrow I'm going to be drawing the winner of today's giveaways. I want to make sure that I keep the giveaway link open for everyone that is watching the replay. Make sure that you guys go in and follow the YouTube channel and follow our Instagram accounts that is linked in the Gleam giveaway signal as well. RC is saying that he has tested my idea on a scalp time frame 1 minute. Yeah, I mean, if I get that live long term, I will buy you a boat, is what I'm going to do. Yeah. All right, guys. Thank you for watching today, and we will see you all tomorrow. Make sure that you do all the things that you should do. You know, like, subscribe, follow us on all the social media, share this with your friends and family. And yeah, see you guys tomorrow.
See you guys tomorrow for the competitions as well.
That's right. You know, I'm so into this. I didn't even. When is my competition? It's on Thursday, isn't it? Yeah, it's on Thursday. Oh, Rich is going to be. I'm gonna trade this. Yeah, that's right. You know what? I'm just gonna trade this in 1 minute. Yeah, I'm just gonna trade this in 1 minute. Rich will be completely blown away. All right, guys. Tomorrow we have tomorrow, Wednesday, we have Anastasia versus Pedro in the first session of the day. See you then. Take care.
Bye-bye.
Peace out.